Good morning and welcome, everyone. My name is Sim Wee Boon, and I'm from the Morning Run Show at BFM 89.9, and I'll be your host for today's Maybank Premier and Privilege Wealth Talk webinar for the first half of the year titled 2022 Investing Outlook, Stress Points, Risk, and Opportunities. First of all, on behalf of Maybank Premier and Privilege, I'd like to thank you all for tuning in and joining this Market Outlook webinar. We've got an exciting lineup for you today, starting with an outlook of the economy with Mr. Suhaimi Ilias, the Group Chief Economist of Maybank Investment Bank. And after that, Dato Teng Chee, Managing Director and Executive Director of Affin Hwang Asset Management, will come on to share his outlook on the equities market. We'll also be taking a look at currencies with some analysis from Mr. Saktiandi Supaat, the Head of FX Research and Strategy at Maybank Global Banking, who will be joining us remotely from Singapore. And of course, this will be followed with a panel discussion with all three of our guests, and it'll be moderated by Mr. Anand Pathmakanthan, the Regional Head of Equity Research at Maybank Investment Bank. And finally, before we close the curtains, Master Iverson Lee, a consultant with Joey Yap Consulting Group, will be sharing some Feng Shui readings on how this year of the tiger is going to be like. Now, just a reminder, throughout the webinar today, if you have any questions, feel free to post them to our guests by logging into www.slido.com, SLIDO.com, and looking for the code WealthTalk1H22. We'll try our best to get to them later. We'll also be running a special quiz and survey later towards the end of today's webinar, and you can stand a chance to win prizes of up to 3,000 ringgit. So do stay tuned and participate in our quiz later after the talk. Remember, it's for prizes worth up to 3,000 ringgit. All very exciting stuff. You don't want to miss out on any of this. Now, to kick off this webinar, we have with us Ms. Eunice Chan, the Senior Executive Vice President, Head of Retail Wealth Management and Segments, for her opening remarks.
Good morning and Happy New Year to all our clients who have joined us this morning. I'm Eunice Chan, and on behalf of Maybank, welcome to Maybank Wealth Talk 2022 on this lovely Saturday morning. First of all, thank you for tuning in today's live sessions on YouTube, which has been exclusively curated for you. As we navigate through the recovery period in the post-pandemic landscape, we know that your financial and investment needs may have evolved, and we at Maybank would like to reassure you that as your trusted financial partner, our commitment to your financial needs remains. Fellow viewers, going into the year of 2022, we expect the global economy to heal from the pandemic. We are seeing improved mobility across the world, where Asia and ASEAN economies, including Malaysia, are expected to play catch-up with the developed markets in terms of growth. A sustainable economy reopening is a critical factor to ensure growth remains above trend this year. In response to a better economic landscape, central banks are calibrating their policies carefully to preserve the monetary space for the rainy days. Rising commodity prices and supply chain bottlenecks are contributing to inflation, where consumers are struggling to preserve purchasing powers. Investors today are standing in between the crossroads of shifting policies, inflation, as well as the lingering pandemic. To all our esteemed clients, today's Wealth Talk features a lineup of gurus who are here to provide and equip you with greater insight and strategies for you to make informed investment decisions. As your trusted financial partners, Maybank is committed to assist all our customers, especially during unprecedented times. We have made available various repayment assistance programs and food and flood relief assistance to assist both individual and SME customers who have been impacted by the pandemic as well as the recent floods. We understand the pandemic has caused a slowdown for local businesses, especially the neighborhood small operator and home-based businesses. We have created Sama-Sama Local, an online marketplace platform that helps our business operator to distribute their products and services online at zero commissions. In further ensuring the safety of our customers during the pandemic, we have launched several digital initiatives that help make banking more accessible and convenient. We raised our digital banking game with the launch of May apps, which offer facilities beyond just banking with features such as expense tracking and tabong capabilities. We also recently introduced the Maybank to You business app. It is a business app for SME clients to perform their business banking needs from the tip of their fingers at any time and anywhere. Ladies and gentlemen, always remember, our relationship managers and financial advisors are just a phone call away if you need any financial and banking assistance. I would like to thank you, our speakers this morning, for joining us and sharing their valuable insight with all of us. And of course, a big thank you to all our guests for attending today's Wealth Talk. Thank you for your continuous trust and support. I hope you will benefit from the insight of today's sessions. With the year of Tiger approaching in a matter of days, I would like to take this opportunity to wish all of you an auspicious Lunar New Year filled with prosperity, good health, good fortune, success, and harmony. 我在此恭祝大家恭喜发财，新年快乐，万事如意。Thank you and stay safe.
Thank you, Eunice, for that wonderful opening remark. That was Eunice Chan, the Senior Executive Vice President, Head of Retail Wealth Management and Segments, with her opening remarks outlining some of Maybank's recent efforts. And now we move on to our first speaker of the day, who will be talking about the economy. The World Bank is projecting that the global economy will grow around 4.1% this year, slightly slower than the 5.5% recorded in 2021. But with rising concerns from the Omicron variant, political uncertainties, and inflationary risks, is this attainable? How should we view 2022, and how will it affect the Malaysian economy? Mr. Suhaimi Ilias, Group Chief Economist of Maybank Investment Bank, will be sharing his thoughts with us via his presentation, Economic Outlook 2022 Reopening Gambit.
Morning, everyone. Thank you, Sim. I hope it's not too late to wish you all a Happy New Year and not too early to wish you Gong Zi Fa Chai. So, another year, another virtual presentation. But as you know, I'm always here to give you our take on the real economy. Again, without further ado, let me begin with a quick run-through of how we see, first and foremost, the global economy. Obviously, global economy is healing from the pandemic. We are looking at economy to have rebounded 6% last year from a contraction of 3% in 2020. And this year, we are looking at global economic growth to continue at a pace of 4.5%. Now, you will notice moderation here. Why? Essentially, it reflects the situation where global economic path is uneven across different countries. Last year's strong rebound in global economy is driven by major economies. They benefit from huge monetary and fiscal stimulus, as well as very early, very fast vaccination and opening of the economy. But that is fading, impact-wise, to the major economies, and we think the coin is kind of flipped. So for ASEAN countries, especially those ASEAN economies, ex-Singapore's, are expected to grow faster this year after a somewhat underwhelming recovery in 2021. As we shake off the impact from the earlier, slower vaccination and opening of the economy to a faster vaccination, as well as what we believe to be a case of a sustained opening of the economy, which will be a key factor for growth of ASEAN and Malaysian economy in 2022. And a key reason for this is progress in vaccination ratios. Malaysia and Singapore already hit the so-called magic numbers in terms of vaccination ratio of its total population of 70% in August, October last year. But for the rest of ASEAN countries like Thailand, Vietnam, Indonesia, Philippines are expected to hit that magic number, 70%, within the first 4 months of this year. As vaccination pace increases, what we see also is steady reopening of the economy. And that can be seen and reflected by mobility indices such as this Google Mobility Index for ASEAN countries, as well as Apple Mobility Index for the regional economies as well. And with that in mind, we are expecting Malaysia economy to register a firmer growth of 6% this year after a somewhat underwhelming rebound of 3.8% estimated for 2021. With the reopening or sustained opening of the economy, we expect to see broad-based kind of a growth across various economic sectors as well as across demand side of the economy, including domestic demand, where we are looking at a situation of stronger consumer spending growth, a rebound in public investment that will support sectors that last year was a bit struggling to recover because our in and out of lockdowns like services and construction. Aside from the headline growth numbers that we expect to be firmer in 2022, I mean, some are the key indicators that I want to share with you. Obviously, there's a lot of talk about inflation, so we do see persistence of inflation this year after the return of inflation last year from the deflation in 2020, and with that, we do expect to see Bank Negara later this year to start the interest rate hike cycle. Cautiously and moderately, we are looking at just 25 basis point increase later this year before the momentum pick up from next year onwards. With the start of the interest rate hike cycle by Bank Negara, we do expect ringgit to somewhat benefit a bit from that in terms of narrowing the gap between our interest rate and US interest rate later this year to end 2020 at 4.10 against the greenback. The economic growth that is expected to be faster, driven by firmer consumer spending next year, is also expected to be supported by improvement in the job market, with unemployment rate dropping to 4% after being sticky at 4.5%, 4.6% in the last 2 years. And in terms of commodity prices, we are expecting continuation of firm commodity prices this year, just as last year relative to 2020. I think in terms of how economic path has been shaping these last 2 years, as can be seen from this chart, due to the in and out of lockdowns, we have been having this kind of a W-shaping path of GDP, unlike the U-shaped path during Asian financial crisis in late 90s and the V-shaped path that we saw during the global financial crisis a little over a decade ago. I think what is more important is we believe the economy is on the right track for a sustained opening as opposed to the flip-flopping in terms of the in and outs of lockdowns. The key reason for this is we are seeing the positive impact of progress and success in vaccination in containing COVID-19 from various statistics, especially in terms of hospitalization and number of patients in ICU, where we see the inverse relationship between vaccination as well as hospitalization, patients in ICUs and patients requiring ventilation. And we do believe the economy has rebounded last quarter from the unfortunate contraction in third quarter due to the reinstatement of lockdown back then, as all the state economy, as in January, have already entered phase 4, which is as good as full reopening of the economy with 100% working capacity and allowance for domestic travel, for us to go out and dine, for example. So this set the stage for a firmer recovery in 2022. Other high-frequency economic indicators are also favorable. We are seeing rebound in monthly GDP. We are seeing improvement in activities of key sectors like manufacturing. And I think the other thing to highlight is going forward, what would be the policies of the central banks. We do see multi-speed interest rate hikes in 2022, 2023 among the major central banks. The one that's going to be very fast in normalizing their monetary policy would be US Federal Reserve, where we expect 75 basis point increase in Fed fund rate per annum this year, next year. The next fastest would be the UK. Even though Eurozone and Japan seems to be lagging behind, but we do expect them to end the negative interest rate policy next year. As mentioned, across the region, we do also expect to see beginning of interest rate hike this year. Malaysia would be modestly raising interest rate later this year, but we do see some other central banks in the region to be a bit more faster in raising interest rate. For example, the Central Bank of Indonesia and the Central Bank of Vietnam. I think as mentioned, Bank Negara is going to be patient. Focus will be more on supporting the recovery process of our economy because there are still slacks in the economy. We have not really fully recovered our output gap is still negative. If we look at indicator on job market, things like unemployment rate, youth unemployment rate, underemployment rate is still high relative to the pre-COVID-19 level. With this negative output gap, the risk of demand pull inflation is mitigated. The still suboptimal job market condition means the risk of wage-driven inflation also is still somewhat limited at this juncture. I think the other key thing I want to highlight about Bank Negara's policy is an interesting observation about Bank Negara being somewhat active in managing the currencies. We see from this chart here, certainly if we look beyond the situation when ringgit was going almost 450 against the dollar at the start of 2020 due to the outbreak of the pandemic, the uncertainty it caused, the risk of recession, so on, I think generally Bank Negara like to see ringgit against dollar not to go too weak beyond 420, 425 region. And we saw in the second half of last year, whenever ringgit go above 420, threatening to go above 425 against the dollar, there seems to be an invisible hand preventing ringgit from going weaker than those levels. So I think this is also a policy to keep inflation in check, particularly from the import inflation channel. I think beside continuation of accommodative monetary policy by the central bank for much of this year, before a rate hike later this year, obviously fiscal policy remain expansionary. We see another year of 6% or more budget deficit to GDP ratio as per budget 2022. But I think the other sort of key highlight of budget 2022 is actually the tax measures that the government introduced to generate extra revenues, to broaden the tax base, to raise tax compliance. So I think this is interesting because there may be some sort of messaging about fiscal policy direction going forward. As we know, if we look at the trajectory of government spending over the next few years, there's no really cutback in spending, but we know the government want to control the budget deficit. So I guess revenue would be the key element in achieving the desired objective of bringing down government budget deficit to GDP ratio from that 6+% in 2020 to 2022 to 3 to 3.5% by 2025. So watch this space, I guess, in terms of what are the elements of medium-term fiscal consolidation going to be. And I'm pretty sure there are going to be few questions on that later. But I think the medium-term fiscal consolidation pressure is not just on Malaysia, it's also happening across some countries across the region due to the big bump up in deficit spending over the past few years and consequently the big increase in government borrowing. Some of the countries in the region like Malaysia, Indonesia, Philippines do have the risk, the danger of having the sovereign credit rating downgraded because of the negative rating outlook put in place by the likes of S&P and Fitch. What about the wild cards to our outlook on growth? Fortunately, COVID-19 still there, still clouding the outlook. We saw what happened in third quarter last year when we have this Delta-driven spike in infections. Economic activities was impacted. Global GDP growth slowed. I think with the emergence of Omicron variant, there is that concern about impact on GDP. But if we look so far, in the period since October last year up to the latest figure on global composite PMI in December, which obviously is a lead indicator on global GDP trend, the impact is not as much as what we experienced during the Delta variant. I think what is interesting about Omicron variant is basically this decoupling between it is highly infectious, infectivity is very high, but we're also seeing the decoupling between cases and death. So it's not as fatal as the earlier variants of COVID-19 virus. And I think why this is the case is because we are seeing progress in vaccination globally, and because of that, there is no dash to lockdown this time around. Everybody is trying to adopt a policy of living with COVID, but continue to observe important protocols and SOPs. I think aside from infections, another sort of wild cards on global economy that is increasingly being talked about right now, inflation certainly is a concern, as we saw what happened to inflation globally during the course of last year, going up significantly. So we are looking at a situation where inflation rate across the region across ASEAN going to remain persistent, going to be faster than what we have seen over the past few years. And speaking of inflation, what's driving it? I think it's quite obvious. The big two factors are the supply chain bottlenecks as well as the surge in commodity prices. But we do also see evidence that the impact of economic reopening on inflation through increase in demand and spending due to this pent-up demand and spending as economy opens on a sustainable basis. But as to where the direction of inflation is going to be this year, there is this interesting chart here that shows you the relationship between inflation and input and output prices. It seems to me input and output price are leading inflation by 6 to 12 months. Interesting also to note that the blue line and the red dotted line there has been trending downward or decelerating in the second half of last year, suggesting the possibility that inflation may peak by middle of this year and start to moderate or decelerate in second half of this year, but will remain, I think, largely inflated relative to previous few years. Watch also core inflation, particularly taking cue from what happened in Singapore. Monetary Authority of Singapore is the first ASEAN central bank to kickstart policy tightening because one very key difference between Singapore and the rest of ASEAN is the steady rise in the core inflation. Why is that the case? As I mentioned earlier, there was this situation where Singapore is very fast ahead of the curve in terms of vaccination and hence opening of the economy. And because of that, economic growth was the fastest among ASEAN countries, and that led to the fast narrowing of the output gap and hence upward pressures on inflation. We also need to monitor, keep an eye on supply chain bottleneck situation. I closely monitor this supply delivery time index, which is a component of global manufacturing PMI, is a reflection or measure of supply chain bottlenecks. The drop in index means worsening supply chain bottlenecks. Thus far, it's still languishing down there. And I think the one thing to watch is actually what's happening in China. I think one of the major contributor to the global supply chain bottleneck is China, because China, unfortunately, is still pursuing zero COVID-19 tolerance policy. So they're very quick to lock down cities, including ports, whenever there is increases in COVID-19 case. So we saw the impact in the chart that shows you the number of days of container vessels waiting at China ports. Compare with 2019, 2020, 2021, saw a big increase in the number of days container vessels have to wait at China port to offload and unload stuffs over there. So this contributed to the supply chain bottlenecks. What are the wildcards that we need to keep an eye on? I think one thing that has already happened is the US Fed's monetary policy normalization going faster than what was initially priced in terms of a QE taper as well as signal from Fed that they're going to be a bit more aggressive in raising interest rates this year. So as mentioned, we are looking at 75 basis point per annum increase in Fed fund rate this year and next year. And I guess the question is really the impact on ASEAN markets in terms of equity, bonds, currency. I think what is interesting to note is there seems to be some degree of resilience, lower vulnerability of ASEAN markets and currencies to US monetary policy normalization this time around, compared with what happened in 2013 during that taper tantrum episode back then. I think one of the reasons for this is obviously we are seeing a situation where foreign holdings of ASEAN and Malaysians' equity and bond is lower than what it was back in 2013. I think keep an eye on China as well, because it seems to me they are going through a secular trend or phase of slower economic growth. We are looking at China economy to grow 5% this year from just over 8% last year, but there is a risk of China economy growing less than 5%, already the case in the last 2 quarters. And I think one particular chart that I want to share with you is this chart that shows you China's debt to GDP ratio. It is at level that in the past has triggered financial crisis, like what happened in Japan in the early 90s, Asian financial crisis in late 90s. and US subprime crisis during 2008, 2009. So that is why I think one of the reasons why China might post slower growth now is there is a crackdown by China's government regulators with regards to debt, particularly on corporate sector. So I guess something to watch there in terms of the impact from slower China growth on regional economic growth outlook. We can't run away from talking about politics. Certainly these next 2 years will be interesting years as far as politics in ASEAN is concerned. There will be elections in Malaysia, Philippines, and Thailand. I think I also want to highlight there's a lot of excess saving in Malaysia as well, which provide a reason for our view that there will be potential pent-up demand and spending, hence our view of stronger consumer spending this year of 7.5% from just 2.8% growth last year. But I think the wild card here is the reason for excess saving also maybe because people decided to be a bit more cautious and keep a sort of a little bit more money under the pillow, so to speak, as a precaution against a rainy day. Lastly, it's important for the economy to see revival in investment, especially private investment, as the government start to pull back its spending, pump priming in the economy. I think the good news is we are still attracting FDI. However, FDI is just 1/3 of private investment. We still have to look at the situation with regards to 2/3 of private investment, and that is domestic direct investment, which I think is still kind of sluggish, tepid growth-wise. With that, I end my presentation, and I look forward to our engagement, interaction later during the panel session. Thank you very much.
Thank you, Suhaimi. That was a very insightful outlook on the economy. That was Suhaimi Ilias, the Group Chief Economist of Maybank Investment Bank, sharing some of his thoughts on the economy this year, some outlook, and the key wildcards to look out for. And now we move on to our next segment, focusing on the markets. Because the KLCI ended 2021 once again as one of the worst performing Asian markets, down 3%. And since the start of the year, the market has been somewhat tepid, having yet crossed the 1600 level. So what can we expect from 2022? What will be this year's bright spots and what will be the laggards? How will regional markets look like? Well, to help us with this is Dato Teng Chee, Managing Director and Executive Director of Affin Hwang Asset Management, with his presentation, Crosswinds and Transitions.
A very good morning, distinguished guests of Maybank, friends. Let me start by thanking Maybank for inviting me for this particular talk this morning. 2022 has started off just about, 3 weeks ago. And we have seen a very turbulent market, especially coming on from US. When we prepared this slide, we prepared it probably weeks ago, and we were just thinking about all the crosswinds and the transitions that the market had to undertake. You know, one thing good about making presentation is that when you present after Suhaimi, there are less things to talk about because he covers most of the points for me. But anyway, let me just run through you my thoughts. Now there are 5 things I thought I want to cover this morning as far as some of the crosswinds, right? Whether it's about the pandemic, which Suhaimi spoke very well on it. And then I'll give you some of my thoughts. Profits, we have seen a period, we're going to go through a period where profit growth, while still decent, is decelerating. I think that's when in US, like Netflix, when the market sense that the earnings story starts to decelerate. We have seen yesterday where Netflix share price was sold down more than 20%. The key discussion that we have this morning is really about policies, especially interest rate policies by central banks. I think that's probably the key that is shaking the market at the moment, questioning valuation, and we'll spend some time looking at that particular space. And I will talk less about positioning, and we'll probably move a little bit about politics, especially at the geopolitics involving US and China. My thoughts about pandemic is this. COVID-19, I interpret from a market perspective, right? I mean, that's how I look at things. Well, yes, there are casualties. Yes, there are people who fall by the wayside, who are affected by it in a big way. But the reality that we are seeing today is that the market's reaction to the emergence of new variants is getting less and less impactful to the marketplace. In April last year, in April 2020, when we first discovered COVID-19, the markets took a big hit and things were just never seen before in our life, because we have never seen the world locked down in the way it had locked down in 2020. When Delta came about, there were a lot of fear, because we've seen from TV, from reports about how India has been so badly impacted. Today with Omicron, I think what I'm trying to derive is that market has the ability to price and learn from a similar crisis. That's the beauty about markets. And as long as they determine that yes, Omicron is infectious, but again, as time passes, the hospitalization doesn't rise, I think market will then move on again to look at new things that they are upbeat about or they may be concerned about. So my point to you really about COVID-19 are two things. Number one, the way market thinks about COVID-19, about Omicron, is that I think they sense is that the governments are ready to consider reopening in a bigger way, to consider relaxing in a bigger way. We've seen yesterday, Singapore has also announced new rules towards the retail arrivals. They are a lot more easier for people to travel. So I think from a government perspective around the world, there seems to be an inclination towards reopening in a much bigger and sustained manner as we go through 2022. I won't talk about growth. I think it's clear growth rates this year and last year, growth rates globally is going to slow down. Slower growth, not slow. There's a slower growth. And as such, we have also seen earnings being revised downwards. Now, the critical point about this is that in the developed markets, especially in NASDAQ, which is really the markets that have performed very well for the last 2 years, valuations are not cheap at all. And when we experience earnings growth that is slowing down, that's where the risk of derating will take place. And that's why we have been relatively cautious. I've been talking about the need to run your portfolio on an asset allocation basis, on a diversified basis. Because we will go through this period of time where things are normalizing. And when it normalizes, that's when you see volatility. And I think the third point that I want to highlight to you is that from an interest rate perspective, the days of zero interest rates, in my view, for this cycle is coming to an end. I think there's no point trying to ask whether it will happen or not. It is going to happen. And for most of the audience I'm speaking to, that's good news for you, because you have been savers. You have been people that have been saving your money for retirement, and over this period of time, you were made to pay to help out during this COVID-19, during this crisis. And I think the periods of zero interest rates will end. But the few points I'd like to make is this. Neither are we expecting central banks to be reckless by raising rates unnecessarily. I think central banks will be probably mindful as they raise and normalize. I don't call it raising, I call it normalizing of interest rates. As they normalize the interest rate, they will have an eye on the economy. They would not want the economy to go through a recession just because of their policies. That's my view. It's healthy to normalize interest rate. It's not healthy to let the economy run at the rate they are running, at inflation running at these levels, and yet interest rate at zero. It's just not sustainable. Over time, it will break down. So I think the periods have come, time has come for interest rate to rise. Maybe probably 2-3 hikes this year by Fed. Now, maybe I divert a bit. The risk to this cycle is everyone is expecting, market is pricing today, that there will be 3 interest rate hikes in US, 3 to 4, each time 25 basis points. Now, the risk, wildcard, is that Fed suddenly decide to raise one time 50 basis points. Now, that can really cause a turbulence to the marketplace. Because if Fed does that, what it shows to the market is that they are really behind the curve. So let's hope they don't do it, but in your mind, there's always that chance that have they done it before? They've done it before. When they were really behind the curve, they then move rates a lot more faster. So we're going to enter this period of rising rates, and similarly in Malaysia, as Suhaimi said, which I agree with him, Malaysia will probably be a bit slower on raising rates, but eventually we will also raise rates by 25 basis points towards the end of the year, and a little bit more in the later, because we have not dropped our rates too low anyway. So we will probably have a little bit more time later this year and into next year. The other point to talk about this particular shift is about the balance sheet of central banks. You have seen in this chart, Fed Reserve balance sheet has risen to 8 trillion, right? The days when we talk about Fed balance sheet, when we first started in 2008, 2009, when their balance sheet was less than 1 trillion, seeing them building up their balance sheet to 3-4 trillion, you say, wow, this is a big risk never seen before. Today, guess what? They're at 8 trillion, double than what they were before COVID-19 crisis. But during a period when there's so much excess money, we have seen asset prices rising. And some of this actually went into even very exclusive stuff like wine, art, jewelry pieces, your Patek Philippe, your watches, everything that's just gone up in price. Like there's no value in money. There's more value in holding precious pieces of stuff. Today, as we look at 2022, it's very clear that the expansion of balance sheet will end this year, especially starting from US, eventually the Europe, and probably Japan will be the last. But we are into that phase where the expansion of balance sheet will probably take a pause. What does that mean to investors? What it means is that excessive money flow will start to contract. What it means is that you will see bubbles that have developed because of this excessive money. I think it may deflate. And one area that it has shown a deflation in terms of valuation is in all this excessive valuation on the Nasdaq market. I'm not saying that the real Nasdaq are expensive. I mean, they're not cheap. The likes of the Microsoft, the Apples, the Alphabet, or now they call Metaverse, they're not expensive. I mean, they're not cheap. They're not that excessive expensive. I mean, you look at Microsoft trading at 33, 34 times PE. You will never get another Microsoft in the world. That's all you're going to get, a company that has dominated the enterprise solution. But if you look at some other things, they have no earnings but trade at 100 billion market cap. Now, those are the ones that will deflate. Because those are the ones that have gotten in the market's imagination during the last 2 years, where the valuations are just cannot be explained. I think those have the risk of deflation because they got no earnings to support it. So I think there's only one example of a specific asset class that may see a lot of threat to their valuation and their share price. So I don't think it surprises the market anymore if you talk about interest rate hike. Markets are pricing it. Now, the other point I'd like to talk about is really about adjustments. The last time, did we have this adjustment before? Yes. In 2013 to 2015, if I'm not mistaken, the markets adjusted from the earlier cycle of 2008, 2010, where Fed dropped rates to zero, built up a balance sheet up to 3 trillion. And then in 2013, 2015, they adjusted. Markets took 3 years to adjust, and those 3 years were negative markets. You're invested in US was faster, whether you're invested in Asia, you find that markets were adjusting. And rates in Fed, if I'm not mistaken, went up from 0 to 2%, and thereafter, the economy moved on, and we had decent markets after 2015, although there were choppiness because then we were hit by Trump election victory, and then subsequent there was some growth to it. The point I'd like to make to you is really we are entering to a second time where market needs to make these adjustments. Remember I said earlier, market has the ability to learn. Market knows what to look out for. Their markets are very smart because it's made up of billions of people investing. So my view is that this adjustment for this cycle may not be 3 years from the market perspective. It may just compress to a period of In fact, this adjustment has started in April last year. When you look at the equity market, how it trades from April last year, markets were talking about the end to money printing by Fed, the end to fiscal expansion of the balance sheet, and also potentially a start of interest rate cycle. So market has started to think about these things and start to price in. So it will not surprise me if this cycle is shorter. It's not going to be a 3-year cycle. It's going to be compressed. Second point I'd like to make to you is that, again, the expectation the interest rate may eventually rise to about 1.5 to 2% in US, and probably then it will stay there. I don't think rates is going to go up significantly. Bear in mind, the balance sheet of most of the countries, developed or developing, their debt level has risen substantially over this period of time. If they were to let rates rise in a very uncontrolled manner, the burden of servicing the debt will be significant strain to all the budgets worldwide. And I think it's something that they need to balance. But at the same time, they need to show discipline. Discipline in a period where inflation is raging on at 5 to 7%. In Malaysia, our official numbers are probably is only 5. We know the real number is not 5. It's double of those numbers. You cannot, central banks or governments cannot be seen being ill-disciplined to control rising prices. So I think it's going to be a balance of both. It will take a war. And my sense is that they probably take the central path by raising rates, at the same time putting an eye on growth and also understand how this will impact their budget going forward if rates rises too much. I agree with Suhaimi. That's why I love to speak after him, because he covers all this stuff. Inflation is high, but I think it's transitionary in nature. It's 7% December last year in US. Eventually, inflation would start to moderate to 2-3%. But it's going to be backloaded. And one of the things we are seeing is really, if you look at some of these slides, you can get it from Maybank. If you want, you can get these slides from Maybank. One of the things is that we do see supply bottlenecks improving. Why do I say so? It's because, I give you a very simple example. In the MCO 3.0 in Malaysia, when the government decided to lock down again because of the rise through Delta variant, Malaysia is one of the countries where we have lots of manufacturing activities, and the government so decided to lock down. What they don't realize is that it affects the whole world, because a lot of things come from Malaysia. For instance, a lot of the cars, parts, some of the critical parts, components, comes from Malaysia. If you are a biker, you are in Shimano, the gearbox from Shimano comes from Malaysia. And when you lock down, you can have the frame of the bike without the gear, you cannot use the bike. And that's why second-hand bikes went through the roof, because everybody wants to cycle. But what we are seeing today is that the governments no longer react, except probably China, where they still adopt a zero-COVID policy, which I think they will eventually relax this year. They're controlling it for the Olympics, but post-Olympics, I think they will be practical to know, and looking at the experience of other countries, that this policy is not sustainable. So I think all these bottlenecks, all this reopening are taking place, and eventually a lot of activities will normalize, as the slide will show you, and that will help on inflation. And on top of it, we're also seeing commodities prices correcting, and partly so because of reopening. In the past, commodity prices were rising because demand were there in 2021, but a lot of mines are closed and all impacted by pandemic. And that's why we've seen supply disruptions, even at the commodity space, that feed on to the end prices. Let me move on quickly, but I just want to spend a little bit of time about China. You asked me a wild card for 2022. I will put a little bit of my exposure, a little bit more exposure to China. China is a market that people don't make money from. I spoke about this for the longest time. A lot of us look at China and say, wow, this is a market that we must invest because we believe, and this is a market that we're closest to. We believe that China will grow and China will overtake US at some point of time. But when you translate that to the equity market, it's a very different ballgame altogether. Most people get caught into China always at the short end of the stick. Why? Because we chase. And the market is driven by liquidity, and it's very sharp, it goes up. very sharp, it corrects, and it corrects longer than it goes up. And that's the China market. If you look at China market, the last 2 years it has corrected. Some are self-inflated, especially on the tech policy. Some are really real threat to the economy, like the property bubble that have just been deflated. But I still don't have empirical evidence to suggest that Chinese government, in terms of policies, they are moving in the right direction yet. But I think it is coming, partly because we take the view that President Xi is seeking his third-term election by November this year, and we think he doesn't want a period of time to basically be re-elected, yet people are out of job, economy is growing at 3% and whatnot. I think all this can be managed or choreographed. Bear in mind, China is still a controlled economy. They can engineer it if they want to. And my view is that it is interesting to keep an eye. I saw prices of markets went up rapidly on Thursday. It was because for the first time, they were very clear on their interest rate policy that they're going to ease. I think when more and more of these signals are sent to the marketplace, given that most of the fund managers are very lightly weighted in China, you will see some surprises. But I'm not asking you to put everything into China, sell everything from US, go to China, then you make another mistake. I'm just saying consider China, weigh in over time. When nobody wants it, that's when you weigh in, because I think Chinese growth there's still a lot of potential there. Let me skip positioning. People have been putting money to the global markets. On average, sentiments are neutral. Let me just move to Malaysia. I only have 3 more minutes to run. You can ask me more questions later during Q&A. Let me just go to Malaysia, okay? I can't escape a market outlook talk without talking about Malaysia, our lovely country. Point number 1. I think one of the key effects of budget, well, the budget is very expansionary in nature. There's no doubt about it. 6% deficit. What really impact from a market perspective is the cukai makmur. We understand the need to have additional tax to manage the deficit, but that itself wipe off the growth that were projected to the marketplace for 2022, just the tax itself. And that itself brought the market down. We think that this effect on cukai makmur will probably ease as we move to the middle of the year, where markets start to look to 2023, and if the growth rates continue to accelerate, I think markets will eventually get over it. Point number 2, foreign investors are very low in Malaysia at 20%, and that remains at all-time low. So it's going to be a very domesticated, very domestic-driven equity market. Last point, I'll say, where are we putting now? As I say, I share this slide with you, buy at your own risk, okay, guys? But we, to our best of our ability, this is where we're putting our money into banks. We think the banks are into a rising interest rate cycle. We think the NPLs are a lot less than what market were fearing during the 2020-21 cycle. There's surprises on credit write-backs. Stack, I think there's a lot of sell down at the first 2 weeks of the year because of high valuation, and those provides you opportunity to invest again in this interesting space. When we speak to the companies, most of them are telling us their orders are full, they're expanding their capacity, double it over the next 1-2 years, and orders are great at the moment. And lastly, healthcare, because we think people who have been holding back on their visitation will start, as economy normalize, we like to play the healthcare space as a proxy towards a recovery. Thank you very much, and I will end here. Please feel free to ask me questions later. I'm happy to address any question. Thank you.
Very interesting stuff there from Dato Teng Chee, Managing Director and Executive Director of Affin Hwang Asset Management. Very insightful views into the local market, especially his views about China, which I found very, very interesting. And again, like he said, if you want to ask him questions later, remember to go to www.slido.com and look up the code WealthTalk1H2022. You can put your questions in there for the panel discussion later. But now we take a look at currencies, where the focus of the year, as our speaker said, will likely be COVID-19 and also inflation, which will probably influence many central bank monetary policy decisions. So for an outlook on currencies, we have with us Mr. Saktiandi Supaat, the head of FX research and strategy at Maybank Global Banking in Singapore, sharing some thoughts titled FX Outlook, Treading Growth Inflation Tightrope in Endemic New Normal.
Hello, everyone. Very good Saturday morning to our honored guests and clients. Wishing all a happy New Year and happy and prosperous Chinese New Year in advance as well. So I'll be the last speaker after Suhaimi and Dato Teng. I think they definitely gave a very good presentations and coverage of all the countries and markets and from a macro perspective as well. So today I'm going to talk quickly about the foreign currency perspective over the next year as well. So next slide, please. So I have a few key thematics that I want to talk about. As Wibun has mentioned, we're going to talk about cautious optimism in Asia ex-Japan FX. I'm going to talk about as well on the renminbi, as Dato Teng has shared just now. And of course, inflation, persistent price pressures, what are the winners and losers? And of course, because of the central bank moves that's potentially coming up on stream in 2022, the uneven policy landscape and divergences, and then I'll talk about key specific FX calls or views before I sort of end with major global risks this year and summarize with what are our key FX strategic buyers. Next slide, please. Next slide. So first off, let me start with the cautious optimism for Asia ex-Japan. COVID indeed is going to still be a major theme. But if you look at the volatility of COVID-linked volatility over the past 2 years, in this chart here, if you look at equity volatility, bond volatility, oil, and even ASEAN FX volatility, the latest Omicron case, and its impact, and previous cases of waves, it typically eases after 1 to 2 months. And then Suhaimi and Dato Teng also mentioned about growth rebound. Suhaimi specifically mentioned about growth rebound in ASEAN. If you look at the chart here, there is some room for an ASEAN rebound in 2022, and with growth convergence as the vaccine sort of rollout sort of improves in ASEAN and the Asia-Pac region, I think you might potentially see a pickup or catch up in terms of ASEAN growth. So something to take note of, which lends credence to some cautious optimism for Asia ex-Japan from a macro perspective. Next slide, please. So if you look at it from global growth, what does it mean for the major currency, in particular US dollar? So what we try to look out for in terms of growth dynamics, we try to compare it with what happened in the period of 2017 to first half of 2018. Which is somewhat similar. We're trying to find a somewhat similar sort of scenario with that, because during that period, there's above trend, broad-based GDP growth, and then you have Fed policy normalization came in on stream. And typically during that period, if you look at the chart on the left, if you look at the bars, the orange bar for that period actually fell, which suggests that there's a decline in the US dollar, and there could be gains in counter-cyclical sort of nature of the US dollar could actually come into play. As a result, Asian FX as relative to the US dollar could actually see a decline. So dollar ringgit, dollar ASEANs would actually start falling down on the basis. But typically our view is I think it would happen potentially in the second half of this year from a macro perspective. Next slide, please. Growth recovery, I think Suhaimi has already talked about this. It would extend to 2022, we think, despite the Omicron risks. So you could have actually some broad potential outlook for regional activity picking up and asset flows. Asset flows net benign and probably could actually pick up and support asset flows into the region, including Malaysia as well. Next slide. So what does that mean also on the theme of persistent price pressures and in terms of Fed policy normalization? So I think Dato Teng and Suhaimi highlighted about the potential of Fed policy picking up this year, and some are calling for 3 in FOMC base in December markets. Some are calling extreme of 5 to 7 hikes but I think the consensus is close to about 3 to 4 hikes this year. But it's a function of rising inflationary risk pressures. In that sort of environment, it could actually undermine Asia ex-Japan, Aussie and Kiwi in the near term, and dollar could actually be supported. So we probably would see dollar remaining supported for the first quarter or even part of second quarter. And some of the currencies like Asia ex-Japan, ASEAN currencies, Aussie and Kiwi, might be actually muted somewhat if the Fed policy normalization comes out faster than expected, beyond that three to four hikes that's already built into currency markets. Next slide, please. There's also a word that Dato Teng mentioned, metaverse. There's this metaverse thematic also that in the FX strategy perspective, we want to look out for. It could be supportive of fund inflows and exports and tech-linked currencies such as Korean won, Taiwan dollar, Sing dollar, and to some extent even the ringgit, because Malaysia has a part to play in the global semicon market share in terms of production of some of the DRAM to meet some of the metaverse value chains. So the metaverse value chains would need memory chips, advanced AI technology, and memory chip is actually a very critical component for users to interact with each other in the virtual world. So the demand for that will actually be strong. So that will be something that we want to look out for in the metaverse thematic as well, beyond from an equity perspective, but also from a tech-linked basket FX perspective as well. Next slide, please. The other element that we want to add on is in terms of pursuit of decarbonization. As we pursue climate changes or policies in the world globally, just want to highlight that transition metals or commodities will play a big role. This chart here looks a bit complicated, but what we want to essentially what we want to say is that a part of Latin America, supply of metals such as lithium, copper, nickel, cobalt, and all that, some of that concentration in the Asia Pac region comes from Australia and Indonesia. So as we focus towards ESG and green and climate change, there is a new commodity super cycle potentially as governments prepare to use green industrial revolution to kickstart a growth post-COVID. So it could be some upside on currencies like rupiah and even Aussie dollar beyond the near term over the next few years. Something to look out for as well. Next slide, please. I just want to touch quickly on another commodity, on gold. Yes, gold, if inflationary pressures pick up, that tendency, people might say that the inflation hedge potential or properties may benefit gold. But our view is, I think, given the Fed rate hikes this year, even if it's inflationary, as rate hikes happen sharply, it can actually dampen appeal. Usually, if you look at the chart here, what you want to highlight here is that gold typically underperforms at the start of policy normalization when there's a Fed taper or rate hikes. But typically gold starts picking up a few months or 6 to 12 months after the first rate hike increase, where as market starts to price in some of these Fed rate hikes already. So something to note of. Our view is, I think, for gold, potentially there's still demand in terms of from buyers, in terms of central banks and jewelers and all that, but there could be some headwinds in terms of gold in the short term as the Fed in interest rates actually start picking up as well. So something to take note of. It could potentially reach to the 1900 maybe the latter part of this year, but could be muted somewhat for the next few months in our view. Next slide, please. Fed policy members, in terms of policy members, it's going to be a bit dovish. We want to look out for this in terms of incoming voting members. Suhaimi has already elaborated on the FOMC front, but we need to look out because the voting members that's coming in, the new ones in FOMC, might be slightly dovish. What this means is essentially it could actually limit some of the dollar upside in 2022 potentially, even though markets are pricing in the first quarter some dollar strength. So these elements, as these new members comes in, should actually limit some of that dollar strength into second quarter and into the second half of the year. Next slide, please. It does mean, though, that other central banks have room to catch up. So other central banks, like Korea, I think Suhaimi mentioned that Bank of England might actually pick up to catch up as well in terms of rates. Australia, Aussie, Canadian dollar, Kiwi. It doesn't, the current performance of these currencies does not commensurate with the respective policy outlooks that potentially could come on stream in 2022. So this catch up could actually benefit in terms of some of the risk-sensitive effects, such as those currencies I mentioned earlier, and including sterling as well. So FX with relatively more hawkish central bank policy outlooks, such as those that I mentioned, could eventually rebound as they catch up with US policy moves this year as well. So something to take note of as well. Next slide, please. The policy moves, like I mentioned just now, and the commodity space reallocations in particular could actually have some impact on currencies like the Aussie. I just want to highlight here, there is a potential for reallocations towards commodity currency as portfolio managers try to reallocate some of their portfolios to diversify into upside for commodities. So commodity currencies like Aussie dollar are a bit net short position at record high, somewhat similar to a record high of long dollar positions. With commodity currencies over the medium term being something positive, I think there's some room for Aussie to actually see some upside, especially as a commodity currency. Next slide, please. So let's go quickly into the key FX views. Next slide, please. Let's start off with the dollar. Our dollar view is essentially this first quarter to second quarter. We think there's some strong support for dollar strength to some extent because of the hikes as markets try to price in, and there might be some surprises in terms of the quantitative tightening and information data set coming out from there. But beyond second quarter, we think eventually the US dollar strength could actually fade as the rest of the world pick up and catch up, and growth outside picks up, and dollar and US economic growth sort of wanes slightly. So you can actually see a dollar softness scenario come in as the counter-cyclical nature that I said earlier comes out. And of course, the medium-term story of exposure of the deficits out of the US actually comes into play. Next slide, please. On the euro front, we are cautious outlook in near term. We see amid the ECB Fed policy divergence, higher energy prices, we think that the central bank are a bit behind. They could potentially be underestimating the persistence of price pressures, and it could actually see further upside on the euro. So we expect the euro to end the year about 118. Next slide, please. On the sterling front, we think that there could be a pickup or catch up on the policy front as well, but actually energy wars and supply chain disruptions can dampen some of that recovery momentum and stoke inflation fears, and the central bank or BOE tightening cycle might come on stream in first quarter of this year, and they could reverse some of the sterling weakness as well. So we're expecting sterling to end the year at 138, sterling ringgit at about 566 and above over the next year. Next slide, please. Aussie front, I've mentioned just now, there's room to catch up on monetary policy normalization with Chinese governments then rendering support to the property sector in China. Economy could actually provide support for Aussie that could benefit from Chinese demand. And of course, infrastructure and transitional pursuits for climate change would have some demand for base metals out of Australia. And I think there's risk appetite for some of the Aussie currency as a commodity currency going forward as the tightening picks up there as well. So Aussie, we expect it to be on an upward trajectory mildly towards 75, but we want to wait for the policy moves on that front. Next slide, please. On the yen, relatively flat in the first two quarters, but we think the interest rate elevations out of policy there might be constrained. It could be the last central bank to move, like what Dato Teng mentioned. But elevated US yields could actually constrain the extent of dollar-yen declines in our view. So it's tied to expectations of Fed policy. We need to wait for that. So end the year at about 112. Next slide, please. On the renminbi front, I think it's going to be resilient because of the lingering pandemic uncertainties. Tends to be more positively correlated when global infections accelerate. That zero COVID strategy lends some credence to some resilience on the renminbi front. So next slide, please. It's strong indeed, but it's not impervious. The strong export surplus of current account balance and narrowing of the services deficit actually has led to that story. It can continue to underpin the renminbi, but if you look at the next slide, Next slide, please. The housing slowdown and COVID outbreaks and lockdowns actually will add headwinds. So we want to look out for policy differentials. We know that China PBOC is actually easing, whereas the rest of the world are trying to move towards a more hawkish or tightening sort of scenario, especially with the prime lending rates being moved in China. What that means is that it will narrow the differential between the US and China rates. It will erode some of the carry advantage. All that will actually weigh a bit on the renminbi carry advantage. Of course, all those other combinations of housing slowdown and all that would actually weigh on growth prospects out of China, something to look out for, but they have actually boosted up in terms of growth and stimulus to boost growth there. So we think it's still going to be resilient, but look out for some of the headwinds out of China. We're expecting dollar CNY to be strong, so dollar CNY to end the year closer towards 630, 635 levels in our view. Next slide, please. On the ringgit front, we think it's going to remain supported and resilient because of oil prices. Oil prices, we think, will be moving slightly higher for this year. And the growth rebound out of Malaysia, as Suhaimi has mentioned. The rising US Treasury yields, though, could actually limit some of the ringgit gains and could induce sharp outflows, unlikely to induce sharp outflows if it's gradual. In fact, I think portfolio flows remains modest into the bond markets for ringgit-denominated assets. So our view is on the ringgit front, as long as the oil story remains and no surprises on the domestic front as growth sort of picks up as well globally, we think dollar ringgit could end the year about 410. If you look at the next slide, on a technical basis, most modest near-term rebound risk is there, but we tend to suggest bias to fade on rallies. The upside risk, like I mentioned in this slide here, the benign oil outlook, renminbi stability, growth recovery, and policy clarity is key. But there are downside risks, the political uncertainty beyond second half of this year, and the fiscal positions, vulnerability, and credit rating downgrade risks are things that I think investors will want to look out for. And those are the removal of some of those downside risks may actually continue to provide support for the ringgit going forward. So that underpins our view for the ringgit over the next year or so. Next slide, please. Sing dollar, I think Suhaimi has mentioned, MAS has moved. We think in April, one more policy move. The question is whether the policy move will be sharper beyond just a slope move from 0.5 to 1% per annum for the Sing dollar near policy. Because of inflation risk, we want to look out for that. What are the key inflationary pressures? Whether the numbers are actually worse than expected, given the underlying growth demand remains robust. So we want to look out for that. But if they actually expect inflation pressures to be much stronger, there could potentially be a recentering, meaning that the Sing dollar could actually strengthen a bit more. So end of the year, we're expecting dollar Sing to be about 130 to 132 range for end of this year. Sing ringgit probably closer towards 310, 311, 312 if that materializes. So it could be an upside risk to the Sing depending on what policy determination comes out in April when the policy announcement comes out. So I think next slide, please. Next slide. So I want to end with the major global event risk quickly. There's a risk of tapering of the balance sheet, stagflation risk, variant risk. There's election risk out of countries like France in April. Australian elections comes out somewhere in the middle of second quarter, but likely probably in March. And then there's ASEAN politics, as Suhaimi has mentioned, out of Philippines and Thailand. All that may lead to some volatility into the peso and Thai baht, and of course on the Aussie front as well, in terms of Aussie direction as well. Next slide. To finalize, strategic bias from the FX perspective, we remain cautious on near-term intermittent pullbacks in risk sentiments, which could undermine Asia, Japan, Aussie, and Kiwi. But we remain positive on some of these currencies. We still remain net bullish on most Asia, Japan for 2022 as a whole. As I mentioned, CNY, renminbi remains resilient in our view for 2022. We think tech proxy currencies like Korean won, Taiwan dollar, and Sing dollar, and even to some extent ringgit, could be supported by the metaverse thematic. We are positive on Aussie and IDR for the near to medium term because of the commodity push. There are opportunistic plays in terms of Korean won, Kiwi, Canadian dollar, sterling, and Aussie as COVID fears that has lingered actually weighed on some of the risk currencies, but some of the FX performances are lagging behind. So there's some catch up for some of these currencies, including the ringgit to some extent as well. So I end my presentation on that note, and hopefully we can, if there are any questions on FX, we can have it during the panel discussion. Thank you.
Thank you, Saktiandi. That was a very interesting and detailed analysis on the currency market. And that was Mr. Saktiandi Supaat, the head of FX research and strategy at Maybank Global Banking in Singapore. All right. Now, we've moved on to one of our highlights this morning is our panel discussion with our three speakers this morning, Saktiandi, Dato, Teng, Suhaimi, and it will be moderated by Mr. Anand Pathmakanthan, the regional head of equity research at Maybank Investment Bank. Now, before we start, ladies and gentlemen, a gentle reminder, if you have any questions, please go to www.slido.com and look up for the code WealthTalk 1H22. Just hit to the website, key in the code, and ask away. We'll try our best to get to them. I can already see the questions pouring in, so keep them coming. These are great questions. So remember, www.slido.com, code WealthTalk 1H22. Okay, and now without further ado, let's kick off the discussion, and I will hand the mic over to Anand for the panel discussion with our guests Dato Teng, Suhaimi, and Saktiandi in Singapore.
Great. Hey, thank you, Sim, for the introduction. And good morning, everyone. And thank you for making the time to join us today at this Maybank Wealth 2022 event. Now, my name is Anand Pathmakanthan. I'm the head of equity research for Maybank Investment Bank. And it is my distinguished pleasure today to be moderating this panel of financial industry experts as they share their insights on the economic and investment outlook, as well as risks and opportunities that lie ahead of us in 2022. Now, all the panelists completed their presentations this morning, and they were very interesting. Nonetheless, allow me to make introductions again. On my right is Mr. Suhaimi Ilias, the Group Chief Economist at Maybank Investment Bank. On his right is Dato Teng Chee, the Managing Director and Executive Director of Affin Hwang Asset Management. And joining us from on Zoom from Singapore is Mr. Saktiandi Supaat, Head of FX Research and Strategy at Maybank Global Markets. Hi, Saktiandi.
Hi, Anand, Dato Teng, and Suhaimi.
Hi, good morning, everyone.
Hello, morning.
All right. So we will be taking questions for the panelists from the audience, yourselves. So please send them in at your convenience and your leisure. But to get the ball rolling, I'll start off with a few questions of my own. So welcome, guys. You know, it's super interesting for me to be in this seat because usually I'm sitting where you are and fielding very difficult questions. But now I get to ask the questions, so I'm quite excited about that. And I'm going to start with Suhaimi. And I have two questions for you, Suhaimi. One on taxes, which we all love to talk about, and the other is growth risks for Malaysia. So, you know, when it comes to taxes, from your presentation, you mentioned that the government, you know, spending trajectory is there are no plans to cut the spending trajectory. You know, it's definitely on an uptrend, and somebody's got to pay for that. Now, we saw in Budget 2022, Cukai Makmur came in to help bridge that fiscal gap. What does Malaysia have to look forward to in terms of tax policy going forward? Because we need more revenues, and I don't think Petronas by itself can bridge that gap.
Yeah, not the kind of topic that people will look forward to, essentially. And everybody always have certain reservations about paying tax, but as they say, there's only two certainties in life: death and taxes. And I think in the end, with regards to tax, I would say Budget 2022 kind of give you a sort of a precursor of what's coming our way, potentially as soon as next year, if not slightly later. I think as I said during my presentation and show it to you, the government have a very aggressive kind of a target to bring down the budget deficit to GDP ratio from the 6.5% that we had during 2020 all the way to this year. And the aim is actually to bring down even less than 5% by next year, I think about 4.8%. So quite a big 1.2 percentage point drop in the budget deficit to GDP ratio targeted for next year, and eventually to reach 3 to 3.5% by 2025. Without any indication that the government is going to cut spending. Bear in mind, for example, in the 12th Malaysia Plan period that covered 2021, to 2025, the government development expenditure allocation for this next 5 years is 400 billion ringgit. What was the figure for 11 Malaysia plan, actual spend? Slightly below 250 billion ringgit. So that's a big increase in spending. So the question is, there's no really indication of government cutting back on spending in any meaningful way. So how are you going to achieve the reduction in budget deficit to GDP ratio? It has to be the revenue side of the equation. And I think from the perspective of budget 2022, the government had to introduce sort of a tax, things like cukai makmur, which to me is actually an additional layer to corporate income tax rate. We already have 2 tier as far as corporate income tax rate. One for SMEs that have taxable income of up to 600,000 ringgit, where they pay 17%, if I'm not mistaken. And then, of course, the standard rate of 24%. But cukai makmur came in at, I think, 33%. They say it's one-off, but I think for that to be really one-off, going forward, there must be sort of either introduction of new measures or return of certain measures that had been in place before. So I guess with that in our mind, we got to consider the possibility of GST return. We have to also consider the introduction of new taxes. And one thing that is in my mind and should be on everyone's radar is carbon tax, to be consistent with, for example, our commitment under COP26 to reduce our carbon emission, which is a global trend anyway, and it's happening already with our neighbors in Singapore, in Indonesia.
Right.
And I think when I talk about GST and carbon tax, they are actually indirect tax. They are not direct tax like your cukai makmur. And I believe going forward, the government is looking at generating more revenue from indirect tax as opposed to direct tax. Why? Look at what's happening around us as well. We are seeing that trend of moving away from direct taxation to indirect taxation. For example, I give you an example of Indonesia and Philippines. 2018, Philippines has broadened the indirect tax. And because of that, last year they are able to bring down corporate income tax rate. So I think around 20%. Indonesia also focusing more on raising indirect tax in terms of the VAT rate hike, and they are bringing down the corporate income tax rate. That make the economy more competitive in that sense in relation to FDI as well as domestic direct investment, an issue that I mentioned earlier during my presentation. We need to look at this issue as well. Yep. So I think as far as the government is concerned, the messaging that they have to bring forth in terms of the medium-term direction of the tax policy of the country is, yes, guys, we're going to go along with the global trend of getting or generating more revenue from indirect tax, but as a sweetener, as an offset, we will lower income taxes. And I think we also need to acknowledge the fact that Petronas cannot be the one keep what you call funding the sizable chunk of government deficit spending, because bear in mind, guys, last 3 years, Petronas has been giving extra or special dividend to the government on top of the normal dividend agreed in the budget. So I think it's not sustainable, especially in an environment where Petronas also have to think about their own capex. They cannot see themselves as an oil and gas company anymore. They look at a total energy company, and that it will include a lot of capex for renewable energy and going green and so on. So I think there's a challenge in that sense, but I don't think it's not unsurmountable. It's just an issue of, I think, ultimately political will and commitment to do that. I think with that, in a way, that create a bit of risk to our growth from policy uncertainty. Yeah. And of course, tied with that is political uncertainty, but I think that's another different issue altogether.
Yes, it's an issue I'm going to ask you next, actually. So you're absolutely right. I mean, Petronas, when we look at their accounts, their cash holdings have been cut in half in the last 18 months due to all the special dividends. So even if we are seeing higher oil prices, you don't think that's a panacea or cure for our fiscal issues. We do have to look at indirect taxes, even capital gains tax, which is a dirty word for us here in this industry, but that's possible as well. And corporate tax, right? When we look at the projections 3 years down the road, Malaysia will have the highest corporate tax in ASEAN, given the cuts we've seen in Indonesia and the Philippines. So a lot has to be done, I guess, on the tax agenda, and probably only after elections, though. My second question is on growth. Yeah, so usually when we present to clients, you're the good news guy, 6% GDP growth this year, things are looking good, recovery. I'm the bad news guy, minus 7% KLCI earnings growth this year because of Cukai Makmur. But we've come through 2 tough years where GDP growth has generally undershot expectations. What are the risks this year to that 6% projection, especially when we have sort of elections in the wings as well?
Yeah, I think as mentioned, that interplay between policy uncertainty and political uncertainty. Certainly, if elections going to happen and it result in an outcome that actually just create more uncertainty and instability, that's I think going to be a bit of a drag. But I guess another risk that perhaps in the back of the mind of every economist is stagflation. I mean, that's a blast from the past in a way, but not as long as pandemic like Spanish flu in 1920s. But it was an issue for global economy in the 70s. So that's another thing I think that we need to be mindful of. That's why, as Teng quite rightly pointed out, is central bank really have to be very careful in terms of the messaging they're sending to the market, to the economic players in terms of the policy adjustment that they're going to do. I think it will have to be very measured rather than overly aggressive because the recovery process is still fragile. The road ahead still got a lot of speed bumps and potholes. So there's always potential for slip up in terms of policy mistakes when you're adjusting.
Okay. Yeah. Thank you, Suhaimi. So Teng, let me move to you. So I have 2 questions for you, one on tech and one on ASEAN allocation. So, as Suhaimi mentioned, we expect sort of a gradual tapering, a gradual adjustment in monetary policy rather than a very sharp adjustment, notwithstanding the inflation issues we are facing right now. I mean, how does that stack up with what's happening in the tech sector right now? The big sell-off we're seeing, sort of this fear that interest rates could rise very quickly and very disrupt the valuation thesis for many tech stocks. I mean, is this a time to get in? Is it a time to step back? We've always made money buying the dips in the last 18 months for tech. Will it be the same this time?
I guess there's always 2 parts to the tech, right? I mean, that's what we always talk about. The so-called the guys that are sizable, steady with revenue, cash flows, profits, the typical of the Apple and the Fangs, right? And then the other extreme will be those that are promoted by Cathy Wood. Disruptive in nature, but highly, I wouldn't say conceptual, but they are not profitable companies, but trade at very excessive valuation. How do you balance a portfolio? But those are the ones that in 10 years from now, a number of these will be winners. But they're all trading probably 5-year forward type valuations.
Right.
They are pricing to price the sales of 20 times on a projected growth of doubling every other year. So my view is that for those that the other extreme of there's no profits, you have to be really mindful rather than jumping in now because you're not sure how to put a value to them. Sure. Inherently, they're worth a lot, but maybe not 100 billion, but maybe worth something, right?
Yeah.
But you don't know where to put the floor to it because valuation is an art, as you rightly have done over the years.
Yes.
It's not an absolute thing, right?
Right.
When sentiment is bad, it can be very bad. When it rains, it pours. So I reckon trying to bottom fish may be a bit early for that space. On the other space where there are earnings, there are real solid business model, I would think if I look at technical chart, I mean, normally into correction, I'm guided by technical charts. Technical charts suggest that maybe it's a bit too early to try to bottom fish.
Okay.
I do not suggest that this correction will result in a crash and suddenly everything disappear. I don't subscribe to that perspective. I do think a healthy correction is good, which we are seeing. It's just that bear in mind, remember I talked about the period where we have so much excessive money because of expansion. And because of that, whenever there are compression or correction, 3 weeks, that's all it takes. and it just priced in very rapidly. We are now second week into this correction. Wait for another week, you will see where it settles.
Okay. So, the good news, I guess, for Malaysia tech sector is those companies are some of the best companies we have in corporate Malaysia, and they're all profitable. They all have, very good outlooks. And, I guess you would be thinking, wait another week and then see where things sort of bottom out, and that could be a good time to revisit that sector.
Yep.
Okay, gotcha. Now, on the ASEAN context, or in the ASEAN context, in your view, let's talk about country allocation first. How does Malaysia stack up against our ASEAN neighbors? Just be blunt, be honest, and just tell us the truth.
I think within ASEAN, the country that stands out most is Singapore at the moment, partly because of the exposure. If you look at Singapore market, the weight sits in the banking sector, and that banking sector today globally is probably a sector where investors are keen to get to have exposure, because it's just a nice exposure to a rising interest rate environment. And clearly in Singapore, we have seen also the earnings momentum for some of these big banks are still very, very solid, partly because the whatever credit costs that market were worried about in 2020-21 did not really materialize. And they have also been controlling costs in the whole process. Although I would say as they come into 2022, there may be cost issue because banks have been controlling their costs very well over the last 2 years. So I think we have been, within ASEAN, we prefer Singapore. And then the other markets that we are quite keen is really Thailand. We see the reopening of Thailand coming through. And we are just waiting for the opportunity to establish some positions in Thailand and play into a reopening cycle.
Did you have a view on Vietnam, which is everyone's favorite right now? It's a really hot market.
I think Vietnam has been a hot market. Just bear in mind, it's not a big market.
Right.
I've been there for many years, observing how it has grown, especially the last few years, where it became a center where FDIs had been focusing on. And clearly, they've done the right thing to be able to attract those investments, those FDIs. However, from a capital market standpoint, they are still very small.
Very small.
Very restricted. There is limits on how much shares the foreigners can own. It's like our old days, when we have foreign share, public bank foreign, public bank local. They're similar. And the foreign shares where the foreigners can purchase are trading at a big premium. So we just have to be mindful it's emerging markets, and there lies in the risk that if anything happens, if it gets overheated, like it went through a period of overheating, the impact on the currency can be massive. The convertibility of the currency is an issue. So bear those in mind as you invest. While there are four potential, very interesting. There are some of these pitfalls that you need to be mindful.
Understood. Thank you, Teng. So let me move to Saktiandi. Saktiandi, you mentioned that short term we may see some US dollar support coming through, but medium to longer term we are looking at a weakening trend for the US dollar, despite higher US rates. I'm wondering, besides interest rates and growth differentials, are there other risk factors, more geopolitical in nature or asset class in nature? We've seen Bitcoin collapse by 50% in the last couple of weeks. Would that cause a rush to safety assets like the US dollar? We have 100,000 troops on the Ukrainian border. If there's an invasion, would that cause a flight to safety as well and benefit the US dollar? What are your views on those dynamics?
Hi, Anand. Yeah, so I've been hearing attentively to what Suhaimi and Dato Teng has mentioned earlier. So on the crypto side, so you're already seeing signs of this removal of some aspect of tightening or liquidity in the markets, affecting riskier assets like crypto and Bitcoin and Ether and some of these other currencies since November. So there's already been a sell-off and quite sharply as well. Now Bitcoin is already at 35,000 when it was at its peak last year. So we've already seen signs of that. So that's, I think, a sign that there is some correction as liquidity gets pulled out. But I just want to add on, you mentioned just now, I mentioned as well, central bank policy tightening, different pace. There could be a potential risk aversion or risk aversion impacting on the dollar because of the inflation story and how policy moves out of the Fed is still not confirmed. Yeah? So I mentioned just now, markets to some extent to the extreme, some are even expecting 5 to 7 hikes this year. FX markets will try to price in some of these surprises from the FOMC deliberations as it comes along in 2022. So it's something to look out for. Suhaimi mentioned about the Omicron waves, which is a pertinent risk factor as well. But I just want to add on that we cannot rule out the possibility beyond just Ukraine and Russia, that the possibility that the Communist Party, National Congress, in the autumn of this year and US midterm elections could actually rev up nationalistic sentiment in the second half of this year. We've seen that before in terms of nationalistic sentiment impacting Chinese assets and sentiment globally. But this is especially possible in a more benign economic environment where the world managed to obtain a better handle in pandemic. We overcome supply side constraints potentially in the second half. And then suddenly you should shift back towards this familiar US-China conflict story that might come on stream again. So all that will add on to higher volatility. It's good for trading as long as we do not get negative unknown surprises such as another pandemic wave or potential small skirmishes or war breakouts. So the added surprise element will be geopolitics, the Fed policy surprises, and any further surprises from variant will come in on stream. But I think markets are already to some extent anticipating some of that already. But the surprise will be on the Communist Party and the US midterm elections, which I think markets have not fully priced in the US midterm elections impact in the second half. And from Malaysia's perspective, I think, of course, political uncertainty in the second half would add volatility.
Great. Well, before we go to questions from the audience, just one more question for you, Saktiandi. From an ASEAN context, if you could pick 2 currencies to hold for the next 12 to 18 months, what are your top 2? Again, be blunt and be honest.
Based on my presentation, I would say renminbi has some resilience as long as they can maintain their growth perspective as well. And I agree, my second choice would be to some extent Sing dollar because of the potential policy move that they might come. And of course, the metaverse thematic impact that might actually support Sing dollar. But I have a third currency. I think Dr. Teng mentioned just Thai baht could see some potential upside if they manage to get some of this COVID variant improve. In fact, in the trade-weighted basket, actually Thai baht has actually outperformed even Sing dollar over the past 6 months. So we want to look out for that front as well.
Great. Thank you, Saktiandi. Let's move to questions from the audience, and there are quite a few coming through. So let me just pick a few here. So maybe Suhaimi, we can start with you. So Malaysia has a serious budget deficit issue. Will interest rate hikes make this even worse and pose a destabilizing influence on the economy?
Yeah, I think that's why, as per my presentation, I think Bank Negara would be careful in terms of raising interest rates because the debt servicing cost of the government now is higher. In fact, you notice in my presentation I mentioned about some of the countries in the region have been placed under negative rating outlook, and that includes Malaysia by S&P. And S&P actually have one particular metric that can be a trigger for downgrade in our sovereign credit rating, and that is the ratio of government debt servicing to revenue cannot be more than 15%. I think we have busted that limit several years already. Yeah, I think we were already above that in 2020 as a result of the big jump in deficit from, I think, 3-point-something% to suddenly 6+%. And we continue to have this deficit at or in excess of 6% even up to this year. So that ratio probably approaching 18-19% already. So certainly the government have, as I said, to provide some sort of an indication in terms of where the fiscal policy is going to be. And it does look pretty aggressive. So I guess as a sort of offset, Bank Negara would play its role also in ensuring that there is no situation of too much of a tightening in both monetary and fiscal policy over the next, certainly over the next year. Because that can be a bit of a dampener or downside risk to the economy. So it's all about managing this policy expectation correctly to make sure that the impact on the economy can be mitigated. And as I said, with regards to the government announcing more tax measures going forward, let's have a balanced approach in terms of, yes, we're going to raise taxes on the direct side, but we offer some compensation offset from the direct taxation, so that net the impact is not overly, I would say, negative to the economy, and we can continue to sustain the growth momentum, take benefit from the opening of the economy, living with COVID, treating it as endemic, and sort of normalize things from now on.
A related question. I mean, if we did get a downgrade by S&P in their next review in June because of our stretched fiscal situation, would that change your view on the economy or the outlook in any meaningful way, be it for the economy or the ringgit?
I think certainly. I think it's a situation where when you have multiple sort of downgrade, we already had Fitch, and then now we have S&P, and God knows what Moody's is going to do, whether they're going to follow suit.
Correct.
It's kind of the last time we had sort of a few rounds of downgrade was actually during Asian financial crisis, but of course that's a very specific event, but it does raise concern about economic outlook, because obviously the cost of funding for the government, and for the matter, private sector, will go up because of a risk premium attached as a result of concern about the government fiscal position.
Right.
And I think also that will hurt sentiment and confidence, so we have to go through that situation as well. And certainly if that happens, unfortunately, I think definitely we will have to reconsider our growth forecast of 6%, and certainly ND have to reconsider the view that ringgit may end up slightly better at the end of this year against dollar.
I think the other point to add, Anand, is really about, remember I showed the chart that the foreigners own 30% of Malaysian equity market. The other chart that I have not shown you is that foreigners are still owning 40% of MGS.
Correct.
And I'm not sure how sensitive they are should Malaysia be downgraded. I assume that if there is a downgrade, I hope it doesn't come, but if it happens, we are still investment grade, I think, the next downgrade, if it happens. I don't think the impact on those investors will be as great, but clearly on a direction basis, it's not healthy.
Right.
Right, to get into that triple B zone. That's the way, because the next downgrade from there, it makes you a non-investment grade, and that's where things can be a bit ugly.
Essentially, there will be risk pricing, there will be discounts, as a result of that.
We want to stay in the A's. We don't want to go to the triple B's like Fitch has downgraded us. But that's an excellent point, Teng. I mean, when we talk about equities, it's been continuous sell downs for the last decade by foreigners. But when it comes to fixed income, as Teng has pointed out, foreigners have still loved to hold Malaysian bonds, and a ratings downgrade could change the dynamic, and that would be very negative for the economy and for interest rates. So definitely a risk to watch out for. Teng, can I stay with you? So, question here: Asian equities have underperformed the US significantly. Should we move away from Asia? It's a very big, broad question. Yeah. Any chance for a turnaround where we start to catch up?
The beauty about assets are that it doesn't fall perpetually, right? I mean, even the famous phrase, right? Dead cat bounce. The markets, I mean, that's the typical of assets. But if you actually look through history, through a series of performance by different asset classes, clearly, developed markets, US performance has been phenomenal for the last 10 to 12 years, relative to all other asset classes within equity. And I think we can talk a lot about it, partly because they have delivered the earnings, and partly because of the way the fund flows have shifted from active manager to passive manager via ETF and a lot of macro allocation. Asia as a whole has disappointed in the last 2 years, partly from China, and also more significantly, Asia did not deliver the required earnings by the local corporates to justify the performance. So will 2022 be a reversal? I think a lot will probably have to hinge on what happened in China, right? And that would drive some form of interest back into Asia. The other one will be the export sector from Taiwan and also from Korea. We do see some reversal of interest into that segment. There had been markets that had garnered a lot of interest, but it died off in the second half of last year. Lastly, ASEAN, but my sense is ASEAN is still a very small component of the overall allocation. So even if you were to have lots of stories and excitement, the reality is that you will not be able to drive the flows as much as what will happen. Typically, the markets will be North Asian markets, China, that will determine the sentiment and towards Asia.
Okay. So very mixed. Good for North Asia, perhaps, but not ASEAN will continue to lag.
Critical to look at how China behave for the rest of this year.
Understood.
That's my view.
Thank you, Teng. Saktiandi, the two questions for you. One is strategic, one is more tactical. It's quite a funny one as well. On the strategic side, do you advise long-term accumulation of Chinese yuan, since China will overtake the US in the future in terms of size of economy?
Yeah, so I suppose from that perspective, in terms of China growth, it has already happened and materialized in terms of growth trajectory going forward. So yes, there's a potential for making sure the diversification and reallocation. But if you just look at it from a reserve assets perspective, the under sort of utilization of renminbi in central bank asset reserves it's actually still quite low. So yeah, there's potential for eventually as renminbi becomes highly traded going forward and all that, it actually makes sense to actually eventually build up your renminbi exposure in the long run as a portfolio in terms of currency portfolio going forward. So, but it also depends on whether we got to take into consideration the medium-term considerations. The demographics for China is also falling out, is aging as well. So in terms of growth trajectory as well, what that means going forward, but there still continue to be a upside or returns even on CNY trajectory going forward. And I think if you listen to Dato Teng and Suhaimi, there is medium-term still growth prospects above potential growth beyond 3% or 2.5% even for China at the minimum within the next 5 to 10 years still that may lend credence to yen appreciation still being supported somewhat.
Got you. So you're on the favorable side, basically, of
favorable side, unless, but I'm very worried with Dato Teng's slide just now as well, right? You saw the renminbi bubble, the China bubble, right? Picking up. It's actually substantially significant. I think Suhaimi, I think both actually shared about that point. So it is something that China needs to manage from a household balance sheet and credit balance sheet, and the fact that their centrally planned economy makes it easily more manageable, hopefully. And if they can manage it to bring it slide it down, I think we potentially could see positive outlook story out of China still over the next 5 to 10 years.
Okay, and on to the tactical question. I have tuition fees due later this year. Should I convert my ringgit to Australian dollars now or later?
So the question is, yes, I think you should convert it to Aussie when it's cheaper now, because the concern is I think the Aussie might get a bit more expensive towards the end of this year as the RBA picks up and risk sentiment. I mentioned just now, reallocations into commodity currencies will start picking up. And I think portfolio managers are looking for ways, now that Bitcoin, some of them have exposures to Bitcoin and Ether are losing, or they want to liquidate and gain profit already. They want to look out for where the upside is. So commodity space, moving into Aussie, the Aussie dollar later on might be a bit expensive. So it might be useful to actually gain some exposure attraction into the Aussie now before it starts strengthening, and not to mention ringgit. We're uncertain about second half in terms of ringgit. So whether ringgit will actually weaken even further in the second half, we want to look out for that risk. So so in simple terms, yes, accumulate some Aussie if you can. If you're willing to gather close to 75% and above, but try to get some bites into the Aussie if you can before you go for your studies.
All right, excellent, Saktiandi. Thank you. We have a question on economics again, Suhaimi, on China actually. Question on China's common prosperity policy. It's causing a lot of disruption, and you mentioned in your slides as well that China growth could be a risk for Malaysia as well in terms of our own growth outlook. What's your view on the common prosperity program, and are there benefits or longer term from that for the region?
I'll try to give a fairly simple answer to this. I think there is this competition between US and China in every sense of the word.
Yep.
I'm half thinking also, China kind of experiment with capitalism, so to speak. Of course, they brand it as, I don't know, social capitalism. I don't know. They experimented with capitalism, but I guess the end product or the outcome is something that they don't really like, particularly in terms of the gap between the have and the have-nots, the rich and the not so rich, and poor, the gap between urban and rural kind of development pace, the cost of living. There's things like this that I think they want to address.
Yeah.
And they come up with this common prosperity drive. But bear in mind, common prosperity really is not new. It is something that happened during Chairman Mao time. So they just, it's actually common prosperity 2.0 we are going through. So, and I guess it's a case of offering or showing or developing some sort of alternative to that kind of unfettered Western capitalism, have something that's a bit more, something that have a little bit more, I'm borrowing Maybank tagline, the humanizing element to capitalism, to economic growth, that kind of thing. And I think it's a key issue globally now. I think if you're not careful, it can create social, political instability. And I think as far as China is concerned, certainly the government of the day is concerned, it is about their sustainability. It is about their longevity as well.
Yeah.
So I think they're addressing the various socio-economic issue arising from the experiment with capitalism, and it's not that they are just making a complete U-turn, but I think that they want to manage it, and as Teng said, they can manage it because the economy is still generally a centrally planned. So there's another kind of experiment going on, offering some sort of alternative to the rest of the world to look at in terms of China being obviously they're going to be obviously the largest economy of the days, and people will look to them quite a fair bit. So they're offering sort of alternative right now. Yeah, it's an interesting sort of experiment to look at, to keep in view in terms of what's the final outcome.
And it has an impact on the investment landscape in China as well. I mean, we've seen them turn the screws on a lot of big private companies, especially in the tech space. That's dominated the headlines. But Teng, are there winners and like mid caps, small caps, from breaking the dominance of the big companies?
I think my view of this common prosperity is something, of course, the capital market doesn't like it, because what you are worried is that you take from the rich and you give to the poor, right? Whereas from a capital market perspective, it's a very different mindset altogether.
Sure.
But as Suhaimi rightly pointed out, it's really something not only about affecting China, but the world, where the rich and poor divide is very wide. And probably you had to give it to Chinese government. They probably are the only one at the moment who's willing to address it and address it heads on. Partly they can do it because they control the economy, they control the system. Whereas in the West, most of the leaders will prefer to just kick the can down the road and let someone else handle the issue. Even as the rich and poor, the gap continue to widen. Are there winners and losers in common prosperity? Obviously, there will be winners and losers, and I guess the key is to follow the trail of the government, where the government is focusing and what they're trying to develop in terms of narrowing their gap between China and US. And clearly, what we have seen during the trade war, one of the key areas that they have been lacking is the development of chip technology. They have everything except chip technology, which they are so highly dependent on China, on US. I guess that's probably where we've seen some of the a lot of investors were chasing. But again, the thing about China is this: just like US, Nasdaq, some of these things are so expensive.
Right.
You can't bring yourself to invest in them because you're talking about multiples or not in 20, 30 times. You're talking about multiples of 70, 80 times multiple. So sometimes it's not easy. While you look at it, you say, wow, these are all very clear winners over the next 5-10 years. But when you look at the valuation, it takes a brave heart to buy them.
Yeah.
Because whenever there's a correction, the thing can be down 30% easily. So I think those are the struggles for managers.
Understood. Yeah, very good point.
The last point I'd like to say, Anand, I would just add about China is this. My observation, I may be wrong, right? My observation is that while sometimes their policies are meant to be good, to put a little bit more discipline to marketplace, have more competition so that the big boys do not crowd out the marketplace, so that you got healthy competition. For instance, now JD.com probably have a better playing field compared to in the past, allowing sharing of data, a lot more sharing of data. What I find annoying from a manager perspective is about communication, policy communication. Sometimes you feel because it's so centrally controlled, one department is going after the other department and see who is doing better in implementing policies direction. And I think that's very, very frustrating for fund managers. Sometimes you feel that they should just learn how to communicate better. You want to do it, it's okay. I mean, if you do not agree of certain things that are happening in the private market, in the system, you want to change it, it's fine, but needs to communicate much better. I think that will help the marketplace.
Yeah, policy communication and implementation. I think Malaysians, we're pretty used to that kind of issues as well, closer to home as well. Saktiandi, can I bring you in again? A very interesting question here. Central bank digital currencies. Any thoughts? You know, will this affect your views on currencies in ASEAN or Asia longer term?
Yeah, so we've heard, we know China is actually already doing that last year and the year before that. But recently, I think Biden and in the US Fed agencies have actually released a report talking about CBDC, even for US dollar CBDCs, right? So I think CBDC, central bank digital currency, could be coming on stream in a big way in some ways. And I think some of the central banks in ASEAN are already looking at that. MAS have already doing sandboxes to examine some potential of that going forward. So I think the CBDC angle will be there. There could be some risk of the impact of that, in particular for the US dollar. If there is a US dollar CBDC, for example, how will that impact on transmission of monetary policy and control of money supply and monetary policy will be the biggest theme, and to sort of and what are its ramifications on impacting the economy and controlling the economy in terms of monetary policy. So that's one element. But I think in terms of use case, CBDC will be very useful in the sense of payments and settlements. If there is going to be a US dollar CBDC, how the payment settlements will be even more accentuated or enhanced for trade and settlements, etc. So I think it's a good move towards that, and it ties in line with the metaverse and with other digitalization efforts that globally we're trying to do, and fits in even with the green climate change elements that we're trying to push without to removing the physical usage of currencies as well. So I think it's a next step. I think CBDC to central bank to actually make sure that there's an alternative to beyond this cryptocurrency space that we're already seeing now. So I think it's good developments. What more to add on would be, my concern is in terms of the monetary policy side, how policy can be impacted on that front as a result in terms of transmission and in terms of eventual usage. Will it lead to further issues? So I think the report out of the US and how we look at it into going forward with the Biden administration pushing in terms of the CBDC for US dollar might be the next thing that we want to look out for in 2022. Anand.
Got it. Great. Hey, thank you, Saktiandi. I think we're 4 minutes away from closing this discussion. So last one or two questions, perhaps. Teng, I got one here for you. Is 2022 an equity year? And this is an asset allocation question, I guess. Do you still advocate having some fixed income in your portfolios? Because it was a bad year for fixed income in 2021.
I mean, even in a very bad year in fixed income in 2021, if I look at Malaysian fixed income per se, you're talking about a decline of about 2%. It's one of the worst years for fixed income last year because the way the yield curve has shifted from a very low level to where they are today. I still believe over time that fixed income has a role to play in everybody's portfolio. It's all about averaging it out over that time horizon that you're invested in. I always say what is critical in fixed income is to try to avoid cases of default in the portfolio.
Right.
Because in the default case, even you hold to maturity, it means nothing, right?
Yeah.
Whereas it's a mark-to-market issue at the moment. And secondly, you are entering at a period where yield curve has shifted, right? Today, the 10-year ringgit MGS is higher than the MGS 10 years before pre-pandemic. So the markets have really adjusted, even as the central bank move interest rate up. My sense is that the long end of the curve will not shift out as much. It's going to be flattening of the curve. The shorter end will move up more. The longer end of the curve will be very sticky. That's just my view. So because the expectation is that when the interest rates start to move up, what the markets will start to worry about by then is whether the economy would move to a slower growth mode. And if it does, naturally the yield curve should flatten a lot more than where they are today. So my sense is that fixed income it still have a role to play in asset allocation. On equity, is it going to be equity year? My sense is that it's going to be a year where I would say it's a volatile year. Lots of volatility. Will equity end up a positive note? I think that's probably it's important to see how fast the market discount. But in some of those markets that have clearly valuation that are very expensive, I think this year may not be a positive year for equity in those markets.
Understood. So from a Malaysia context, just to close off, you would still be most heavily weighted in equities rather than fixed income or cash. That's fair to say.
I think at the moment, cash is a dominant part.
Oh, it's a dominant part.
It's
Wow,
about
interesting.
30% into cash.
Okay.
Fixed income will probably, we typically keep the fixed income at about 40%, 50%, and then the balance 20-30% is in equity.
Okay.
Although we will probably shift a little bit more into equity as we move through the rest of this year, but we actually just have been defensively positioning the portfolio as we entered the year.
Understood. Great. Excellent. Thank you, Teng. So I think we've run out of time. So I'd like to thank my panel members here, Suhaimi, Dato Teng, and of course, Saktiandi down in Singapore for all your insights. And we will bring the panel to a close. Have a good day ahead.
Thank you. Thank you,
Thank you.
Anand.
Thank you.
Bye.
Thank you. Thanks, Anand.
Thank you, Saktiandi. Wow, that was a very fruitful discussion indeed. Many interesting questions and views. I hope it was good and insightful for you all. Apologies if we did not manage to get through all of the questions. We are running out of time. And with that, I'd like to thank our speakers, Mr. Suhaimi Ilias, the Group Chief Economist of Maybank Investment Bank, Dato Teng Chee, the Managing and Executive Director of Affin Hwang Asset Management, Mr. Saktiandi Supaat, the Head of FX Research and Strategy at Maybank Global Banking in Singapore, and of course our moderator of the day, Mr. Anand Pathmakanthan, the Regional Head of Equity Research at Maybank Investment Bank. And now we move on to a very special segment of the webinar where some of you will be able to walk away with prizes of up to 3,000 ringgit. Head on back to slido.com and key in the code WealthTalk1H22 and you'll be able to join our quiz. The quiz is only limited to 100 participants, so join quickly or lose out on your chance to win these awesome prizes. It's only 5 questions, and I hope that you've been paying attention throughout the webinar because the answers might have been mentioned throughout today's session. Again, www.slido.com and key in the code WealthTalk1H22 or scan the QR code that you can see on your screen now. Only 10 winners will be walking away with the prizes. So quickly, www.slido.com, look for the code key in the code WealthTalk1H22. We're only limited to about 100 participants, but only 10 winners. And we only have 5 questions, so the questions will be spread out throughout the day, and if you paid attention, you would have probably guessed the answers. Okay, now I think we've reached our limit, and it's time to move on to our first question. I can see all you guys now, Kevin, Taruma, Anthony, Pei Ling, Kenny. So many of you joined in. Really good luck. All the best to the next question. So I think it's time for us to move on to our first we're still waiting. More of you. It's so great. More and more people are joining in. We're reaching our limit of 100. Henry, Hatta, Kenny, Isulin, Taruma, welcome. Welcome, Diane. Welcome, Jaden. So many of you guys are joining in. It's pouring in. Very exciting stuff. But out of these people, only 10 people will be able to walk away with the prize of up to 3,000 ringgit. We'll be having 5 questions after this, and when you answer the question, answer quickly. You can't answer halfway. You got to answer, start from the first, second, third, all the way through to be eligible to win the prizes. Okay, I think we've reached the limit, and we're going to move on to our first question. And the first question is, I guess we're still waiting for more people to join. All right, the first question. 2022 is the year of water tiger, fire tiger, wood tiger, or metal tiger. Please key in your answers to be able to stand a chance to win the prize. Again, the question is 2022. What is 2022 the year of? Water tiger, fire tiger, wood tiger, or metal tiger? Remember, in the Chinese zodiac, there are 5 elements, and out of these 5 elements, every 12 years, it will come off. And so the question here again, what year of the tiger is this? Is it water? Is it fire? Is it wood? Or is it metal? And we have the answers. It's water tiger. 61% of you got it right, where the rest, 29% fire tiger, 5% to metal and wood tiger. Apologies for that, but that's the wrong answer. Congratulations those that got the water tiger answer correct. And now we move on to our next question, which is, what is the theme for today's webinar? There's 4 answers for you there. The first one, stress points, risk and opportunities. Second one, 2022, will economic and market performance coverage or converge or diverge? Third one, looking ahead with the new normal in mind, what's in store for risks in 2022, as well as investment outlook 2022, stress points, risks, and opportunities. That sounds a bit familiar. So again, choose the right answer. 4 answers for you to choose from, and the correct answer is investment outlook 2022, stress points, risks, and opportunities. Most of you got it right. Congratulations. And now we move on to our third question of the quiz. Which of these panelists was not a speaker of this webinar? It's a bit tricky right there. Suhaimi Ilias, Anand Pathmakanthan, Dato Teng, or Mr. Saktiandi Supaat. If you stayed throughout, you will be able to guess. One of them just joined right before this quiz, so you perhaps could guess who is not the speaker. Again, we are looking for not the speaker, we're looking for not the speaker. We are Suhaimi, Anand, Dato Teng, or Saktiandi. And right now, the correct answer would be, and it's Mr. Anand Pathmakanthan. Congratulations to those that got it right. 87%. You guys were really paying attention, so good for you. Now, we move on to our 4th question. And the 4th question is, what is the name of Maybank Premier and Privileged Chinese New Year 2022 campaign? Again, 4 options to choose from. Roarsome CNY, Catch Your Match, Hello Tiger, or Maybank Tiger. It's pretty complicated, but I think if you were paying attention, you would have guessed it, which is the right answer. 4 options to choose from. Roarsome CNY, Catch Your Match, Hello Tiger, or Maybank Tiger. We're looking for the name of the Maybank Premier and Privileged Chinese New Year 2022 campaign. And the correct answer is Roarsome. Oh, a lot of you picked Roarsome CNY. Oh, great. Good for you. Catch Your Match, Hello Tiger, Maybank Tiger. Sorry, those weren't the right answers. The correct answer is Roarsome CNY. So congratulations to the 62% of you that picked the correct answer. And now, finally, our last question. What are the grand prizes for the Chinese New Year 2022 Roarsome CNY campaign? These are the grand prizes for the campaign that Maybank is running in this period. The first answer, Perodua Beza and Mazda CX-30. The second one, BMW and Proton X70. Or the third one, a BMW 320 Sport I and a Mazda 3. Or the last one, a BMW A320 and Mazda CX-5. Very tempting prizes. If it's possible, we want all these to be the prizes, but there's only 2 prizes that will be given. And it's, most of you have answered the correct answer, BMW 320 Sport I and Mazda 3. Congratulations, we've reached towards the end of our quiz. And while we wait for the results to be tabulated, allow me to take this opportunity to talk more about Maybank's ongoing Roarsome CNY 2022 campaign. which could see the possibility of you, again, driving away with the two grand prize that we just showed just now, a brand new BMW 320 iSport or a brand new Mazda 3. I can definitely imagine myself driving through the road with that. There's also a whole slew of other great prizes to be won as a part of this campaign. It'll be like e-vouchers, gold nuggets, and more. So for you to learn more about this campaign, we'll be showing you some videos with highlights of the campaigns and details on how you can win these prizes. So pay attention and do enjoy. All right, and that was Maybank's Warsome CNY campaign. Some details on that, on how you can join and perhaps walk away with the grand prizes, which is a BMW or a Mazda 3. Now, we have finally tabulated our results. We have 10 winners for you out of all those that have joined, and your name will shortly appear on the screen. And if you see your name on the screen, Ong Hancock, KL customers, you can see your name. Make sure you email your contact details to gwn.marketing@maybank.com. Email your name and your contact details now. We have our team ready on standby to receive the email and contact you back to make the necessary arrangements for you to claim your prize. Again, the email is GWM. You can see it here. gwm.marketing@maybank.com. Congratulations to our 10 winners. I know a lot of you joined, and a lot of you got the answers correctly, but again, the first 10 that answered correctly won the prize, and these 10s are Ong Hancock, KL customers, Chin Siu Chi, Ken, Shafika Suri, Nancy, Pei-Ling, KM, Kong King Tiong, and congratulations, Charlene Ngu. All 10 of you will be able to walk away with the prizes. Just make sure you email gwn.marketing@maybank.com. Our teams is standing by now to receive the call, receive your email, and contact you. So do email now, gwn.marketing@maybank.com. These 10 winners, again, you'll be able to walk away with the prizes. You'll be able to walk away with the prizes worth up to 3,000 ringgit. Okay, and now we move on to a special segment, a special treat for all you that have stayed with us throughout the session. It's a very special Feng Shui presentation on how the Year of the Tiger will be like with us all. We have with us Master Iverson Lee, a consultant with Joey Yap Consulting Group, who'll be presenting his thoughts titled Thriving in the Year of the Tiger.
Hi everyone, how are you guys doing? Okay, well, thank you for Maybank for inviting us here to share with you how to actually take benefit and opportunities available for you in the year of our water tiger or the year of 2022 here. So before we start here, I would like to just introduce a little bit about what I'm doing here. So my name is Iverson Lee, and on my daily job here, I do a lot of consultation where I have the privilege to work with a lot of people from different walks of life, be it like a businessman, professionals, and even come down to students, to giving them information and strategy. How do you thrive in the year ahead? So I believe that one of the reasons all of you here actually watching this live broadcast here is because you want to know what is the opportunities available for you in 2022, right? We are not just to want a great year. We want to thrive in the year of 2022. And it's my job here to share with you how do you make use of Chinese astrology, or to make a better decision. I think a lot of time when people think about or heard about Feng Shui or Chinese astrology, they keep thinking about what kind of color of the shirt I should wear, or should I wear certain necklace, or what kind of color of my hair should be, right? That part is not Feng Shui. Yeah, let me just get this out of this discussion here first, right? Otherwise, you keep thinking, what kind of color shirt should I wear? All those things that you're thinking about is not Feng Shui or astrology, is fashion design. All right, so fashion design, you can wear whatever you want, is do nothing about your luck or your opportunities in 2022. So, and then what the next question here is, how do we make 2022 a great year for us? So it's very simple. It's by making a better decision. Don't you guys think so? Right? You think about all the things that we had right now. I think some of you here achieve a lot in your life right now. And you think about this, all of these things wouldn't happen if it's not certain decision you make along the way. Agree? So the whole purpose of Chinese astrology is to help you to make a better decision. And how do we do that? In order to do that, we need a reference chart. Just like how the economists forecast the financial trends in 2022 onwards, they're using a lot of statistics of financial graph, for example. So what we are doing here is we use one piece of information, what we call the barter chart. So if you want to benefit from this 1 hour sharing here, I want you to get your barter chart ready. Okay, so let me show you here on the screen. Yeah, this is the slide where there's contained a link there. Pay attention to the link here. You can scan the QR code or can go to the link joeyyap.com/Maybank, where you can actually plot your barter chart. So barter chart is nothing more than information that you can use to help you to make a better decision. Some of you are very new here, you don't know what it's all about. So let me tell you what kind of information you can retrieve from the chart. It can tell you about your talents, right? Your talents about like what you can do well in your work, and also can tell you about your financial capacities. And more importantly, it also can tell you about opportunities available for you in 2022, right? How many of you here want to create more wealth and able to identify more wealth opportunities? I think the broadcast, you can actually type some comments there, right? Yeah, type it there. I want to see it now, right? So how many of you here want to make 2022 the best year ever, right? Despite of what is happening. Okay, so if you want to, you need to get this piece of information ready for you. And by the way, this information is free. You can actually plot this barter chart here multiple times. So I would suggest you to actually plot it not only for yourself, for your friends, for your family members, right? And also maybe your boss, right? If some of you are working for others, right? Don't you think one of your career success also got to do with your ability to manage your boss well? Right, so therefore, yeah, this is free, by the way. You can plot as many charts as you want. And once you got this chart ready, then we are good to go, right? So now, how do we make use of this chart here? Because I understand that some of you here are very new. Probably this is the first time you heard about Chinese metaphysics, right? So let me tell you how do you make use of it. So let me show you, this is the part we want to achieve today, right? How do we know 2022 would be a great year for you, right? How do we know? So it's very simple. The moment you're able to achieve your goal, right? The moment you're able to get what you want is a great year. Don't you think so? A lot of people talking about a great year, but they not really know what it means, right? So let me tell you. Do you have certain goals you want to achieve or not? Let's say right now you say, hey, I want to increase my net worth to 20 million this year. That is a goal, right? If you're able to achieve it, then don't you think it's great? Or maybe some of you want to actually create a meaningful relationship in 2022. So that's also a goal, right? So your goal is something personal to you. So on the slide right now, if you look at the slide right now, it's talking about in order to use Chinese astrology in the most effective manner, you need to know where you are right now. So, and then where you want to be, there's a gap. As shown on the slide, there's a gap, right? So the whole purpose of using Chinese astrology is to close this gap. Make sense here? Right? We will close the gap. So the moment we close the gap means we achieve what we want. And let me tell you first, Chinese astrology is not going to predict your fortune. Right? It's not a fatalistic reading like, oh, you're destined to be rich or you're destined to be poor. It's not like that. Right? Because on our life, there's one part of us is about free will, our ability to make decisions. So we're going to use this system here is not to tell us what is our destination. We use this system here so we can create a better future. Then how do we do this? So in order to do this, I'm going to look at the financial graph first, right? So all of you here, you want to forecast about the trend and all those things, look at the financial chart. So right now, this is the one that we are looking at, right? About luck, right? So now this is the chart that we are looking at right now. So of course, some of you are very new here. You don't know what this means, right? There's so many information contains inside this piece of information. So this is the annual energy for 2022. We call this Sparta chart. Yeah, you can call this a guide or reference, whatever is fine, right? So, and now, don't worry about all this information here. It might look Martian to you right now. Yeah, but let me tell you, or let me show you, how do you read this chart in the most effective manner? And how do we do that is, I'm going to summarize this into 5 things, right? As you've shown on the screen right now, there are 5 elements, and there are wood, there are water, there are metal, there are earth, there are fire elements. So this is not the real fire or the real wood. Yeah, I know that some of you here, you approached astrology before and you discover, hey, my chart lack of water element. Should I drink more water? Should I do more swimming? And that is not true, by the way. Yeah, because this water is not the real water, right? So you think about this, right? If you take this literally, what if your chart is too much water? Does it mean you shouldn't drink more water? It doesn't make sense, right? So therefore, these elements that written in a chart is just, I would say, it's just a description or a signpost of what kind of energy available in 2022. So right now, you might not able to read what is contained in the chart, but I think you can easily identify which elements is the strongest in 2022, right? Pay attention to the slide right now. On the right-hand side right now, you see that there is 5 elements, right, on that side, right? So tell me, right? Tell me which elements is the strongest among these 5 elements. Every year will be different. That's how we do the forecast, by the way, because we do a lot of forecasts for our economists and also a professional CEO, business people. So this is the 5 pieces of information that we use in general. So tell me, among these 5 pieces, type in the chat box right now if you have, you can type in your YouTube channel and type in. Yeah, so as you know, the wood element is the, I would say, is the strongest in the chart, right? So let me do some generic or macro analysis here first. If you look at the industry, right, wood element governs medicine. So you can actually anticipate there will be a lot of medicine, right, that actually introduced, yeah, to cure certain pandemic and all those things, right? And the wood element also represent certain got to do with healing and cell healing. So I would say if you're paying attention to biotech industry, there's also one of the industry you can look into, right? Some of you are asking, right, where is the trend going to? So wood element also represents a education, and you see that a lot of things got to do with data, analytics, and even self-help. Yeah, will be something that will be gain the most attention in 2022 for you. So now, this is a generic outlook, right? So if you look at the second strongest element in the chart right now would be the water element, right? You see the water element is a second strongest in the chart. So which means that water element represent e-commerce, represent IT infrastructure, also represent logistic even, so an entertainment industry. So whatever I mentioned just now will be also one of the area that a lot of people will pay most attention to likely in 2022. But right now, I think in your mind, you might ask this question, right? What is this in for me? Right? So therefore, because this chart here is not your chart, remember, this is an annual energy chart. This will tell you the macro part. So if you're thinking about like what kind of health issue likely people will actually experience this year, because wood element is the strongest, so therefore you discover that a lot of people will have stomach issue, or if you have stomach issue already, right? So this is a year you need to pay more attention to. And then another area would be fertility related issues, right? In terms of health, and then right, this information here is not something to be afraid of. Right? This information here is something that you can make use of, so you can take action in advance to prevent those things from happening. Right? Does it make sense? Okay, now, this is a generic overview of 2022. So how does that apply to your chart? Right? The first question that when people always ask me, hey, Iverson, he say that, how do I know this year I have good luck or bad luck? How many of you here want to know this? Yeah, you want to know that whether this year you have great luck and bad luck. So before we do this, actually you can read it fairly easily from the chart, but I'm going to tell you what is the definition of good luck and bad luck first, right? A lot of people think good luck means what? Yeah, hit lottery. Okay, that's not, right? Good luck means that your mind are clear, you are positive, and then you have clarity in mind, and then you also achieve things easily, effortlessly, because you might get help from others, right? You might get help from great teacher or your boss or anyone that came across your path here that can help you to get you there, right? And you're happier because things are more easy for you. There are less distraction, and there are less last-minute surprise. Do you want to know this or not, right? Once you know this, I think you can share this piece of information with your families and friends as well, right? This is my goal for today, is to teach you how to make use of this chart here. So first of all, take out your Pathmakanthan chart, right? Take it right now. Remember just now I showed the link where you can actually plot your Pathmakanthan chart. So take it out. And right now, I want you to actually look into this part. Okay, all right. So this is your Pathmakanthan chart, right? This is a sample Pathmakanthan chart I'm showing on the screen right now. So what you need to pay attention to is this part, right? As per highlighted on the screen. There are 4 boxes here, and then do you see the elements inside? It could be wood, there could be fire, there could be metal, it could be any of the 5 elements. Since there are 4 boxes, which means there are 4 elements, you might contain 4 elements in the chart. Okay, now, if you have a choice, which element you rather need to have in your chart, you want to have in the chart? I want to think a little bit here, right? So you think about, if you recall back what I said just now, among the 5 elements, which one would be the strongest element? Yeah, type in the chat box right now. Which one of it? Yes, you're right? Wood element, right? So now you check among the 4 boxes that I showed, as shown on the screen right now on the slide, do you see any wood element or not? There are 4 boxes, so which means that you have 4 chances to get it right. Okay, so check right now. Okay, if you have 1, type the word 1. If you have 2, type the word 2. If you have 3 or 4, type the word. Maximum there are 4 only, right? Because there are only 4 boxes. So what you need to do here is you need to take a look at it. And if you're 0, type the word 0. Okay, don't worry first. All right, you might think, okay, some of you don't have, you have 0 element. Yeah, then you might have 0, right? So what does it mean? So if you have 0, element, it means that in terms of luck this year might not be a lot. Okay, so but now let me give you the backup or the insurance. Remember just now, what is the second strongest element beside the wood element? Do you still recall? Water, right? So if you don't have this wood element in the chart, faster check right now. Do you have the water element in the chart? So if you have this, then I would say that you still also part of the force, right? In the thing here, all right? So I would say that would be great. So now, once you see this right now, I want you to actually, some of you, if you have 0 elements, you don't have wood, and then you don't have water, right? You might think, oh, this must be a bad year for me, right? No, don't worry, right? Because if you think about this, right, in our life, the reason we are successful or getting what we want, not necessarily because we have luck, right? It also got to do with our own skills, our own attitude, and our own experience, right? As you look at all the line of speakers just now, they share about their vastful hands of experience and knowledge, right? You can also make a difference on that. Just because you don't have the luck doesn't mean you cannot succeed in 2022, all right? But if you have luck, it means that it's easier and it's more effortlessly, and you're likely to find people to help you. If you don't have it, let's say you have 0, you don't have water, you don't have wood element, which means that you need to actually depend a lot on your skill, your experience, and you still can make the year a great year for you. Okay, great. So now, how about someone here that they want to know, what can I do, right? Now I don't have the luck, right? So what can I do? What kind of options do I have? So in the Pathmakanthan chart, we also tells you can actually discover the winning options. How many of you here want to actually know the winning options that you have? right? Okay, luck is put it aside, but you also want to know what kind of options I can take this year to become better, right? Because part of Patser astrology allows you to understand or see what kind of opportunities available or the power of anticipation, right? If you know in 2022 what kind of probable events or situation might happen to you, then don't you think it would be great, right? So now I want you to take out your Patser chart again, and then right now I want you to focus on this part. Okay, as you show on the screen, there are animal signs. I think some of you might heard this before, right? So which year you're born in, you could be born in the year of tiger, you could be born in the year of horse, right? So that part is belong to the year. If you pay attention, there are 4 columns, right? There are 4 animal signs. I want all of you here to know that all of us here in the Patser chart, we are not only contain 1 animal signs. There are total of 4. Because there are 1 animal sign belongs to the year, another animal sign belongs to the month, and then the third one belongs to the day, and then the fourth belongs to the hour. So each of us have 4 animal signs. But 95% of us only know 1, right? Because we've been saying, oh, which year you're born in, right? So you think about this, right? If I say that, okay, if rooster, let's say, I'll just give you an example here. If rooster animal sign is a great animal sign for 2022, does it mean that all your classmates also enjoy the same luck? It's not possible, right? But yet all of them are born the year of rooster because the same year with you, right? So they can become your schoolmate or classmate, right? So therefore, the year alone cannot tell you precisely what kind of opportunities available to you. It's too general. So a real astrology, which you are learning right now, every one chart that have 4 animal signs. So I want you to pay attention to the screen. If you have a chart, you can pay attention to your chart. There are 4 animal signs in total, right? So there are the rooster. In the sample here, there's a rooster. You see a tiger there. So there's a rat, and then finally there's a goat. So this is a sample chart, but your chart maybe have different animal signs. So I want you to identify these 4 animal signs first, right? Because in the next 10 minutes, I'm going to tell you what each animal signs means, or what kind of opportunities that it contains so it can take certain action. So if that animal sign is part of your Patser chart, it means that those opportunities are available to you. So if you do it, you're going to get it. Yeah, that's what it means. So there are how many options here? 4 options. Okay? All right, so now, let me tell you how do you actually, first of all, among the 12 animal signs, I'm going to share with you the best 5 first. Just like a music billboard, right? There are top 10, there are top 100. So out of the 12 animal signs, I picked 5 of them that will be I would say the titans or the big 5 in 2022. Okay, let me show you. Yeah, let me show you the big 5 animal signs first. Okay, there you go. So let me just, don't panic first, right? So, there are so many, right? Don't worry, right? Let me explain to you how it works here. On the screen right now, there is a rabbit, right? You see a rabbit there? You see a snake, you see a monkey and rooster, and finally the boar animal sign. Do you, out of your 4 animal signs, does any of the 4 animal signs that you have in your chart belongs to any of these big 5 or not? Check right now. Do you have a rabbit in the chart? Yeah, if you're listening to me right now, you know that your chart not only have 1 animal sign, right? You have 4. So I want to look at the 4. Do you have a rabbit? Or do you have the snake? Or do you have the monkey? Or do you have a rooster? Or do you have the boar? Right? If you have one of these big 5, yeah, this year you see that a lot of achievement could happen. Yeah, if you're talking about success probability and the chances of success, this is the one that animal signs that actually achieve something faster, easier, simply because of one thing. They are motivated, and then they are clear on what they want, and then they do whatever it takes to achieve their goals, right? These are the 5 animal signs that I like. Okay, cool. So this is, I want to just do a quick scan. Yeah, so later on, we go through the detailed scan here. It's just like go for medical report, right? This is like you're going to a general physician. You want to look at overall in 2022, what kind of luck do you have, right? So now, do you have any of those? If you have 1 out of 4, it's great. Some of you might have 2, right? Some of you have 3. How about some of you might have 4 out of 4? Maybe your chart, you have a rabbit, you have a snake, you have a monkey, you have a rooster, right? So I would say that 2022, you need to pay attention to whatever goal you are setting, because very likely you're going to achieve it because you're driven. Yeah, that is very important. Okay? All right, nice. So now, let me walk through each of the 12 animal signs so you know precisely what kind of options you can take. Okay, let's start with the first one here. Monkey. So I want you to pay attention to your chart right now. Do you have a monkey animal sign in your chart? Right? It could be in the year. It could be in the month, day, and hour. So let me just show you the chart again. Backtrack a little bit here. So if you look at the animal signs, there are 4, right? So do you see that each of them belong to the different columns? So if you see in the chart right now, the rooster belongs to the year column, right? And then the tiger here belongs to the month, and then the rat belongs to the day, and then the goat belongs to the hour. So each animal sign belongs to different pillar or different house. It could be the year, could be the month, could be the day, could be the hour. So now I want you to check on your chart. Do you have this monkey animal signs either in the year, month, day, or hour or not? Yeah, check right now. Okay, so why monkey is important this year? Because monkey is a star of change. Yeah, it's a star of change, which means that you might know there will be a big change happening to you this year. Okay, so even though we haven't crossed the 2022 yet, because from Chinese astrology perspective, the year of tiger begins in February 4th, on February 4th, 2022. So now we are almost there already. So if you have monkey in the chart, which means even right now, you already foreseen big change will happen to you. All right, so it's something that that is one of the benefits of knowing your astrology chart, because you know in advance. This one, then you might ask, right, Iverson, how many percent, is it guaranteed there will be a big change? I would say 100% guaranteed. Okay, now, let me tell you, do you want to learn something deeper, a little bit deeper? Do you mind to do it? All right, okay. So, don't you think if you have the monkey in the chart, this monkey could be possible in the year, month, day, and hour, correct or not? Okay, so if your monkey animal sign belongs to the month, remember there are 4 pillars just now? If you belong to the month pillar, so which means that there will be a big change happening. If you're running your own business, your business model will going through a huge change. If you're working for others, your employer, you'll see that your job role and your job responsibility will actually undergo a big change as well. Now check on your chart. Right? You know it will going to happen, right? So in the month pillar, especially because the month pillar represents the career. Remember there are 4 animal signs? Look at the month especially, right? It represents huge career change for you. And now, monkey, change doesn't mean it's bad, right? A lot of people think, oh, change is bad. No, right? You can change from, you can get promoted even, right? It doesn't mean it's a bad thing. And one good thing about this monkey for this year is that it's like a magician that can actually make problem disappear. Don't you think it's cool? So if you have the monkey in the chart, so you become a solution provider. A lot of people ask, right, hey, how do I make money? How do I double my sales? In the end, no matter what business you're running, if you want to make more money, you need to double up your value, right? What kind of value are you able to offer to the customer? Are you able to solve customer problems or not? Right? Because due to my job nature, I actually spoke, another group of people I actually work with is also millennials. They want to actually start their companies, right? A startup company. And then they keep telling me a lot of the great ideas, how this happened, like NFT and all those things, right? It's great that you have ideas. After they're sharing me with all this story here about their aspiration, the next thing I always ask them is like this. Regarding to your business plan, what kind of problem you're trying to solve? Yeah, we need to face reality, right? You want to run a business, you need to make profit, right? If your business not able to help your customer to solve problem, your business will not succeed. Agree? So if you have the monkey in the chart, this year you're the solution provider. So which means that in the company, if you want to succeed, offer what? You need to offer your time, your effort to help people to solve problems, right? People will come to you anyway. If you have a monkey in the chart, a lot of people that have issues that come to you look for help. So what you need to do? Help them. Yeah, become valuable. Yeah, this is one of the part in the monkey. And one good thing about the monkey, if you have monkey in the chart, it also contains a star, what we call an Earth relief star, which means that they were able to actually came across a lot of property related deals in terms of investment, right? So if you have the monkey in the chart, and then I want you to pay attention to the property market because you're able to observe some great deals available just for you. Okay, pay attention to that. And one thing I want to actually emphasize here is, if you have it, doesn't mean it will come to you. Yeah, a lot of people think, right, oh, it means I do nothing, I stay at home, all these opportunities will flow to me. No, you still need to take action. The reason you know this, now you know, okay, if I have monkey in the chart, I know that this year I should look into property segment of the or in the market. All right, that is a monkey for you. Okay, so now check your chart. The next one I'm going to talk about is this, rooster. Now check your chart. Do you have a rooster in your chart? Be it in the year, month, hour, or day is fine. So you have a rooster in the chart. Let me give you the keyword here. Rooster is something got to do with the big boss. So this year you have the final say, yeah, and then you're able to conquer and dominate. Yeah, so if you're a business owner, if you're thinking, hey, is it a right year for me to expand my business or expand or increase my market share or even acquire companies? If you have a rooster in the chart, which means that this year you have a lot of opportunities to do so, or even go into public, right? IPO, right? So if you want to list your company, then if you have a rooster, if you're a business owner, that will be useful for you. So this is a rooster ability. So it's like a big boss. Yeah, so I would say that pay attention to this. And then now, the second part about this rooster here is it contains a star called a dragon virtue, the technical term. It means that whatever problem you're facing this year, somehow the problem will be either disappear by itself or getting smaller, right? For example, like maybe you discover that you lost a business deal or you lost money from a specific investment. And then without you knowing, in few days from then, and then you're able to discover another more profitable investment, right? So rooster have this ability, so which means that they're able to dissolve problem automatically, right? Just now, if you recall back the monkey, you need to actually take action, yeah, to actually dissolve something, right? But this rooster somehow, certain people will willing to help you, or the timing actually change, or the circumstances change for your favor, right? Things don't happen to you. Things happen for you, right? That is a rooster. Don't you think it's great? So this is one of the reasons why this rooster belonged to one of the top 5 just now, right? We like to have rooster animal sign for this year. Okay, great. So now, the next one, the next animal sign here we'll talk about is the dog. So if you have the dog in the chart, this year you have one ability is you are very innovative. Would you like this or not, right? Dog, you have this ability. So which means that you have a lot of ideas how to offer or create a new product or solutions. So, and I think this is very important, especially if you're running your own business, right? So, and for example, like you want to create a new product, you need to find the gap in the market, right? Which are the area that is not properly served, or there's a gap, or certain needs are not met yet. You have the ability to invent a new services or product for that area or for that segment. So you have the dog. This year, I want you to pay attention to your thoughts. Right, have a journal or something, beside you. Whenever you have a thoughts, I want you to actually write it down. Yeah, this is something very important for you, because a lot of your thoughts you're having this year, we are able to help you to generate money. If you're talking about investment, these are animal sign have the ability to actually see the value on a small company. So if you're talking about growth investing, right, or undervalued companies, so this animal sign have the knack for it, right? Pay attention to this if you're talking about investment. All right. So now, next one. How many of you have the ball animal sign in your chart? Right? It could be the year, the month, the day, and the hour, doesn't matter. So if you have this sign here, it indicates one thing. It's the way you make money this year, a lot got to do with the people you know. So guess what? How should you spend your time in 2022 here? It's about increase your networking time. Right, talk to people, engage, meet new people, because the animal sign of the ball here, actually you have the ability to meet different people, and in result of that, you might actually get some investment opportunities or business deal or even employment opportunities as well. Yeah, because the ball have this networking style for this year, which is great. And one thing here, although it's not investment related, it's a bit trivial here, but I need to share with you. If you have the ball in the chart, very likely this year you're going to gain weight. Okay, for all the ladies out there, you might, oh my God, right? So what does it mean? So first, don't get worried first, Right? Check on your chart how many ball you have. If you have one, it's easy. What you have 3 in a chart, then you need to plan, right? You need to watch out what you eat. Because this year, due to networking, you tend to eat a lot, you tend to enjoy yourself. Because this year, ball is a happy animal sign. When they're happy, they like to eat, they like to spend time with their friends. So in result of that, they might gain some weight. I'm not saying that gaining weight is bad, but if you want to gain too much weight, right, become a health issues, right? So therefore, I want to pay attention to that if you have the ball animal sign in your chart. Okay, all right. So now, let's move on to the next one here. Is the ox. So ox animal sign for 2022 is about pivot. It's about changing the direction of your business or the way you do things. If you're a marketeer, yeah, if you're actually in charge of the marketing department in your company, so what you need to do here is you need to change the way you market something. So a great change must happen. So this is about pivoting. If you are talking about investment, so this is also a time that you want to actually see what kind of other asset classes that you're able to actually invest in. So you need to actually change, which means that whatever you're doing right now might already outlive its usefulness already, right? So you need to think about what other things you can do here. So this is the ox. And one good thing about the ox here is you have the ability to meet rich people or high net worth people. Do you like that? Yeah, so if your job are related to sales or you're serving the premium client, all of this group here, so this year you have the ability or the chances or the opportunities to meet with them. Okay, if you're talking about investment, I want to pay attention to the investment that a lot of like watches. People collect collectibles. Like, some people that they actually like Richard Mille watches and all those things, right? They trade all this, they invest on these watches or certain handbags, or anything that is a collectibles that is all the rich people want. This is one of the area you can actually look into as well. Yeah, that is the power of the ox in 2022. So next one, tiger. Now check your chart. I know that this is the year of tiger, right? So among all the 12 animal signs, tiger is the king for this year. Okay, so what is the keyword for tiger here? Tiger talking about one thing. It's like a diamond. So what do you think a diamond do? Yeah, have you heard about a song that or lyrics that say something like this? Shine bright like a diamond. So this year you'll be super popular. How many of you here you want to actually start up your YouTube channel, or you want to become an influencer or KOL, key opinion leader, right? So if that is one of your plan to do it to actually create more wealth for this year, right? Then this is a year you're able to do it well, because this year your influence level increase, which means that people like to hear from you. People like to hear your content, your knowledge, so which is great, right? So therefore, a lot of people think, hey, but is it something I can make money out of this? Of course. If you look at the new world, one of the new currency is attention. Yeah, let me repeat this again. Attention is the new currency. The more attention you get, online, right, you can make a lot of money. Right? That's how a lot of people right now, youngsters right now, they make a lot of money from this domain here. So you have a tiger, and if it's part of your plan to actually create a strong online presence this year, then this would be the great year for do it. Okay, that's a great one. So next one, rabbit. Okay, rabbit, I like rabbit here because rabbit represent attractiveness. Right? So this year, people like to talk to you because somehow, people feel that you're more attractive than you were before, and you just simply, people feel good when it comes to you, right? So if you have a rabbit in the chart, and if you are doing sales, which is very important, right? So therefore, you're able to attract a lot of people that like to talk to you and all those things. This is the power of this rabbit. And one more thing about this rabbit, you have it here, is you have a very powerful nobleman. A lot of people keep asking a question, do I have nobleman this year? In Cantonese, we call Guayan, right? Nobleman means that helpful people. A lot of people say, will I get help or not? Will I find mentor? If you have the rabbit this year, you're very likely able to meet someone that can help you to actually improve on your career, your business, or your investment. Or you might find the right teacher. Like a lot of people, the reason they cannot, they stop investing because they cannot find the right teacher. To teach them how to invest properly, right? So if you have this star here, means that you can actually able to meet or the right teacher or even the right doctor, for this year. If some of you maybe you want to help your friends or family members looking for the right doctor to heal their disease or illness that it wouldn't heal for so many years ago, then this year is a great year for you to look for one. You're very likely going to find the right doctor to heal that specific illness or that ailment. All right? That's for you, for rabbit. So the next one here is a horse. So how about horse? Check your chart right now. Do you have the horse in the chart? If you have a horse in the chart, the horse represents one thing. Your authority in your work will increase because you're going to be given more work to do. You have more responsibility. Right? Especially if you have a horse in the month. Especially, you check your chart right now. Because remember just now, the month pillar represents your career or your business, right? You have the horse in there, which means that more responsibility. So now, it's a choice, right? Whether you want to accept it or not. Yeah, some will say, oh, I don't want more responsibility. Then you might not able to reap the benefit for this year. So if you have the horse in the chart, if you have it in the month especially, so I would say you must say yes. Just say yes to new challenge, to new opportunities. Even you haven't done it before, say yes first, and then you learn along the way. Because if you're able to do it, by the end of 2022, you're able to see the results. Or you might get promoted, yeah, then you become a better leader of yourself. Right? So the horse have this ability there. All right? Okay. So now, next one. Snake. So snake for 2022, it represents entrepreneurship. So you have the snake in the chart. If you're working for others, very likely you already have a thought you want to start something on your own. Okay? Yeah, because they have a lot of business idea. But let's say you say, but I don't plan to start my own business. Yeah, don't worry. Yeah, don't you think you can offer this idea to your friends as well? Right? You say, have a partnership. Okay, I give my idea. Maybe I will do some profit sharing. You still can benefit out of it. So the snake has a lot of entrepreneurship ideas. They're great in business acumen for 2022. Okay, so now, let me teach you to do this even you don't have the snake, right? So maybe some of you say, okay, Iverson, I want to start my own business. I don't have any ideas, and the problem is I don't even have the snake in my chart, right? Then how do I go around with this? So very simple. I think you have friends, right? So don't you think you can plot their chart as well? By the way, the link is free, right? You can plot as many charts as you want. And then you plot their chart, key in their date of birth, and then you see whether their chart got snake or not. Right? If their chart got snake means they have great ideas, right? What you need to do, ask them out for dinner or drink. Ask them to share about their ideas. Yeah, then you drop it, you write it down, and then you execute it. Right? So you still can do that, right? So don't just limit what you had in your chart. Yeah, there are people around you that they have all this opportunity and they don't know about it, then it's your job to let them know. Right? That's why I asked you to actually plot your friend's chart, your family chart as well. Okay? All right. So the next one here, the goat. How many of you have the goat in the chart? So if you have the goat in the chart, I would say that this year is a great year for you to actually look into, is a animal sign of a good news. What do you mean good news? Good news means that someone are getting married or someone having a baby. So the someone is you this time. You have the goat in the chart. Right? For example, like if you are single this year, then right now you're single, which means that this year, very likely you're able to find someone, if that's your goal. And if you're already with someone, very likely going to get married this year. And if you already get married, maybe it's a year you'll be a new addition to a family member. Right? New baby is on the way. Right? If you're thinking of that, this is a good. But what if you say, hey, I was already 60 years old. I can't have baby anymore. Right? What does it mean to me? So it means that maybe now you're already a grandmother, right? You have a grandchildren along the way. So the good star is a happiness star for this year. You receive a lot of good news, right? Not only on yourself and also from your family members. So this is a great star to have for if you have the good in the chart. Okay? And the thing here is the next one. The next one is dragon. So if you ask me, hey, I would say just like you mentioned about the top 5 animal signs, right? And I would say that one is the best one. How about the not so good animal sign in 2022? So I'm not saying maybe it's not the word not so good, right? It just means that certain stars that have less opportunities, right? So the animal sign that don't have a lot of opportunities for this year is the dragon and then also the rat. So let me talk about the dragon first. And again, right, don't feel depressed or sad just because you have dragon in the chart, right? The dragon has no fault, so it's nothing to afraid about. So let me tell you first, what is this dragon means? So if you have a dragon in the chart, since you don't have a lot of positive energy for this year, this is a great year for do one thing, investment. Yeah, so the best investment in the world is the investment on yourself. So this is a great year for you to do a lot of things like acquire new knowledge, new skill, learning from someone, or maybe also improve your health. Don't you think your health is also one of the most important investment, right? If you don't have health, I don't care how great investor you are, it means nothing, right? So health is everything. So you have a dragon this year, I think one of your attention you need to pay to is yourself. So it's a great year to be selfish. A lot of people say, oh, I care about my family, right? I cannot put myself first. You think about this, right? If you want your family to do better, you must be better first. Agree? Until you cannot be better, you cannot help your family. So if a dragon in the chart, although a lot of people say it's not a great animal sign, I beg to see otherwise. I see this is a great star to have because it's a star to slow down and then invest on yourself, right? So it's like sharpening the saw. Instead of continuously chopping the wood, it's the right time to sharpen the saw. All right? Okay, so now, the next one I'm going to talk about is the rat. So if you look at the rat here, remember just now I told you the dragon and the rat, they have less positive energy this year. So if the rat this year, this is a year that I want you to actually have some, plan a long-term goal. Yeah, don't aim for short-term rewards, plan for long-term. Because whenever someone say the rat don't have positive energy this year, it just says 1 year, short-term, right? So if your goal is not short-term, you plan for long-term. What does it mean? You won't get affected by it, right? So therefore, it's a year that don't ask for life purpose, right? A lot of time, because if you have a rat, you're going to ask yourself a lot of weird questions this year, like why I'm born here, what's my life purpose, what's my passion, I'm lost, right? So if you're a rat, tell yourself, stop asking all these questions. Instead of asking about life purpose, ask about progress. Okay, reserve all these life purpose questions for 2023. 2022 is a year to making progress. Yeah, if you're a rat, if you're able to do this and you set a long-term goal instead of a short-term goal, then it will be a great year for you. Okay, so if you want to apply this for investment, what kind of investment is more suitable? Is it a long-term trading or more to mid to long-term investment better for you? Long-term, mid to long-term, all right? Yeah, so if you have the rat, yeah, this is something you can actually look into. Okay, so what I've just covered is all the 12 animal signs. And remember just now, you have 4 animal signs, right? So the 4 animal signs is the things you can take action. Depends on what animal signs you have. So you just take action according to what I shared with you just now. Okay, all right. So now, do you want more information? Yeah, I prepared so many things for all of you here today. So now, let me summarize this for you. A lot of people asking, right, what is this year whether I'm blessed with investment opportunities or not? Okay, so I already selected all these 4 animal signs that have, I would say, exceptional investment luck. So as you know, right, investment is not about just luck, right? But don't you think if you have the luck as well, it's even better, right? Because investment is a skill, right? You need to educate yourself. You need to understand the market, right? You cannot ignore that part. That part is very important, right? So, but beside of that, now you're the best investor in the world. Don't you think if the market work to your favor, don't you think it's even better? Right? So if you have all 4 these animal signs in your chart. Now, let me be more specific here. Remember just now you have 4 animal signs, right? The hour column. Remember your animal signs, there are 4 columns. The year, the month, the day, and the hour. So the hour column specifically represent investment. Yeah, now I want you to deep dive a little bit there, right? So more detail. Remember there are 4 animal signs, right? So if you have any of these 4, right, it's not enough. You need to make sure any of these 4 animal signs actually resides in the hour pillar. Now check right now. Do you have it in the hour pillar right now? If you have it, this year you have a lot of investment luck. And again, it doesn't mean you simply buy, you make money, but it just means that out of 10 deals, even you don't know investment, maybe out of 10 deals, 7 deals are great. So it's your job to educate yourself with investment knowledge to able to actually make an informed decision for this year. All right? Okay, now, this is a good one. Of course, we also look at some of the animal signs that don't have much luck on investment for this year. So now, a lot of people say no luck, right? But I don't agree with that. I would say that regardless you have luck or not, every year you should do investment. Agree? Right? This is what I know that a lot of people in the outside that are actually talking about, I only invest on my good year. On the bad year, I stop investing. Then I always tell these people, what if your next 20 years is a bad investment luck? Are you going to stop investing? Of course, no, right? So because investment here, luck is only one part. So I would say that whenever someone tells you that bad investment luck, it doesn't mean you have bad luck. It just means that year, you are more careless, or maybe you let your emotion get the best of you, you're greedy, and therefore your intelligence suppressed. Have you been into those moments before? Right? A lot of time we make some bad decision is because we are too emotional or we are too greedy, right? And, oh, this is crypto. I want to buy everything right now, right? And then after that, you say, oh, then suddenly you make a wrong decision. So therefore, these are the 3 stars that I would suggest them to actually do a more low-risk investment, and then you do a lot of due diligence before you make investment for 2022. So what are those animal signs? As shown on the screen right now, there will be monkey, there will be dragon, and be rat. So where you need to look for these animal signs? In the hour pillar. Right? There are 4 pillars, right? Look at the hour pillar, because hour pillar represents investment. Do you have monkey, you have dragon, you have rat, you have this? Aim for low-risk investment, right? And mid to long term. Yeah, less risky is okay for you. And then also remember, don't let your emotion get the best out of you, right? And don't invest the money you cannot afford to lose. Yeah, this is right. Don't gamble all your saving, all right? Okay, now, this is for you. And then one more thing I also think is important is also about this one, health. Okay, so health is very important for a lot of people ask, right? Which animal signs are more subjected to health issues? For 2022, this would be the 4 animal signs. And there'll be the monkey. You check your chart, do you have monkey or not? If you don't have monkey, do you have the ox in the chart, or the tiger, or the dragon? Right? So these are the 4 animal signs are more susceptible to illnesses because their immune system very likely will be weaker. And then again, right, you might ask, there are 4 animal signs. Where should I look for? Right? Just now, the investment is in the hour pillar, right? Okay, that one you already know. But for health, we look at the day pillar. Remember, there are year, month, day, and hour pillar. There are 4 animal signs, right? I want to pay attention to your day. Check your day pillar right now. Do you have a monkey, or ox, tiger, or dragon? And you have any of these animal signs here, then I would say that you actually need to look for, just pay attention to your health, have a healthy diet, lifestyle, take care of yourself more, it should be fine. All right, so this is the 4. And then health, not necessarily just mean physical health. Yeah, also could represent emotional health as well, right? So if you have this, I would say this year, don't overstress yourself. You have some meditation, all these things to have inner peace. Yeah, that's the right word. Okay, inner peace. So if you have any of these animal signs in your day pillar, inner peace is one of your main priority in 2022. Because if you look at investment, right, the most important aspect of an investment is the investor himself or herself. Agree? Right? So it's all about how the person thinks, the mindset of the investor. So if you have any of these 4 stars here, I want to pay attention to your mental or your emotion, right? Because maybe this year you're a bit emotional. All right? Okay, cool. So this is what I shared with you is all the animal signs, so you can actually know what kind of strategy you can do and what kind of action you should take and shouldn't take in 2022. All right? Okay. So, and now, do you guys still want the, let me share with you one part here is about the Feng Shui. Because in Chinese astrology, we talk about, one part here is about the Bazi. Bazi is about assessing our opportunities, right? What is good, what is bad, what you should take care about, like what I share with you, the health focus. But this one is about diagnosis. Right? Just like go for medical checkup, right? You get a medical report. So the Bazi chart will tell you what is good, what is bad, so you can take action on it. So how about cure? How about certain medication or something you can do to increase the opportunities? Do you want to learn that as well? right? By knowing alone is one thing, right? But how about what are the solution? So whenever we talk about the solution, then the Feng Shui will come into play. Right? I think some of you heard about Feng Shui before. So I'm going to talk about here. So I'll share with you a simple way you can apply Feng Shui to create more opportunities for you in 2022, especially investment opportunities. Okay, so in Feng Shui, a lot of people think, right, it's about putting items. You're putting items on the bedroom like a dragon or a toads or a mandarin duck, right? Or maybe certain painting they put in the wall, all these things. Those things are not Feng Shui. Yeah, so remember this, Feng Shui doesn't require you to put any item whatsoever. Yeah, remember that. So you need to buy anything. Because that part, putting items, is called interior design. Okay, you can put whatever you want. Yeah, you can put whatever animals or picture you want, anything, that one is fine. It's up to you. It's a personal preference. Feng Shui only talk about one thing, energy. So is the energy that are in your house is positive or negative? So if the energy is positive, then if you live in that house, you expose with all this positive energy, don't you think you become better? Yeah, just think about this, right? I want you to recall, who are you talking to most of the time, or you mix with? Your friends. If you constantly surrounded with negative friends, they keep telling you the world is not fair, the whole world is conspired to hurt them, right? They're very negative, then what will happen? You eventually, if you mix with them a lot, you become like them as well, right? But what if you mix with winners, right? They're all talking about achieving their goals in life. They play the game in a higher level. They are the A player. Then eventually you become like that as well. So therefore, Feng Shui work as the same concept as well. The more you expose to positive energy, you yourself be happier, your health will be better, and therefore you have energy to take action to achieve your goal. Yeah, that's the whole purpose of Feng Shui. So right now, how do we know in our house which area contains better energy and which area contains less favorable energy? Don't you think this is important? So if you know which area in your house that have positive energy, you can position yourself in that area. Maybe you want to do your work there, so you can, I would say, expose to those positive energy as well. Okay? All right, so I'm going to share with you how do you look into that. So I know a lot of you here are new to Feng Shui, right? So now I'm going to talk about short-term Feng Shui. Short-term Feng Shui means that this technique I'm going to share with you right now is you can use for 1 year, specifically for the year of 2022. So if you look at the box right now, by the way, this box here is full of numbers, right? And this is not lottery number, okay? Let me make it clear from the start. This is not your lucky number. It's nothing to do with that. These numbers here is just telling you what kind of energy available in your house for 2022. And then if you see on each of the boxes are represented by a sector, right? Take a look at the number 1 there. Yeah, pay attention to number 1 in the diagram right now. Do you see the N there? N represent north. So which means that in the north sector of your house, this year your energy type is number 1. Yeah, you don't know what number 1 means yet, it's fine. I'm going to explain to you later. Right? Just telling you, each sector will contain different type of energy. So now, let me show you how do you do this. Yeah. So let's say this is your floor plan. You need to get your floor plan ready. You want to apply Feng Shui. This is your floor plan. And then what you need to do, I want you to actually find the center point of your house, your floor plan. So roughly in the center there, and then you overlay the direction there, right? The 8 directions, north, south, east, west. So how do you know where is north, where is south? Right? Easy, right? Nowadays, all your smartphone have the compass app. All you need to do is just to launch your compass app, and the needle always point to where? Point to the north. So once at the center, you take your compass out, and then you look at the needle. If you know where's the north direction, you will know that is the north sector already, right? So if you know where's the north, don't you know? You also know where's the south and the rest of the direction. Agree? Because the opposite of the north is always the south. So now on this diagram here, show you roughly you know which area is represent which sector. So you look at this diagram here. You look at the master bedroom right now. At the top right corner, do you see it belongs to southwest? So if let's say this is your floor plan, your own floor plan, If someone asks you, where is your master bedroom located, you're going to tell this person it's located in the southwest direction. Okay, everyone follow? Okay, so now, tell me right now, where is the dining sector in this example here? It will be in the northwest, right? You see the dining area there, it will be in the northwest sector. All right, so now this is for you to identify all the sectors in your house. Once you're able to do it, so now, if I want to know if south is good, let's say I tell you later on, let's say I'm going to tell you, okay, south is good for 2021. So you just highlighted those areas, and then you try to spend your time in those areas in 2022. Make sense? Now I'm telling you the concept. Of course, you don't know what is south is good for. I haven't told you yet. I'm telling you what I did just now. I'm telling you how do you demarcate all the sectors in your house. And now you should know which sector is which. All right? Okay, once you know this, so let me tell you, I'll bring back the chart here. So if your goal for 2022 is to create more cash, a lot of people think cash is king, right? Actually, it's not true. Cash is not king. Cash flow is king. Agree? Right? So don't you, if your goal this year is to increase cash flow, so number 8 is your area you want to spend more your time in. So right now, the number 8, where is the number 8 located for 2022? You see a northeast there, right? So if I want to apply, let's say I want more cash flow this year. I want to have more opportunities to get more projects if you're running your own business, or more business opportunities, or if you're working for others, you want to have increment, or want to look for a job that have better pay, for example, then northeast is the area to pay attention to. So now, let's use this example here. Do you see where's the northeast or not? The northeast located where? Living room. Do you see a living room there in the northeast direction? Yeah, look at the northeast, NE there, you see a living room, right? So now tell me, where you should do your work if you work from home? Northeast area. If your goal is what? You want more cash flow. You want more job opportunities. Yeah, but this will also require you to work hard, okay? Yeah, because number 8 star is a hardworking star. So if you use this area, suddenly you discover that your boss is going to give you a lot of work to do. And because of that, you become valuable, and in result, if you did a great job, then eventually you get promoted. Yeah, that's how it works. Okay, so in the office. So I think you get what I mean, right? In office. So now, let's say right now, your problem is not cash flow. You say, I have too much money already. My problem right now is I don't know how to spend my money, where to invest. I want to find more investment opportunities. So if that is your goal for 2022, then the focus point will be in the south sector. Okay, south sector. So in your house tonight or later on, you look at the south sector of your house. If your goal is related to investment opportunities, pay more attention to this area. Okay, so now let me show you back the chart. So as highlighted here is in the south is there, right? So yeah, move there. Yeah, do your work there, and then maybe you do your reading there, do your investment-related activities there. Yeah, that one will give you this advantage from Feng Shui perspective. And then you have a better analytical power as well, right? Because part of Feng Shui about investment also, you need to know the market trend, right? You need to have a clarity of mind, right? Not just because everyone rushed to buy something, you need to buy, right? You need to know what are you really doing. So this sector here also gives you the sense of clarity about what you can do. So this is the sector you should spend more time into. All right. So now, and the next one. The next one here is the north sector. The north sector is the nobleman sector. So if your goal this year is to find the right people, right? Let's say right now, remember just now I told you that the rabbit, you're able to actually find the nobleman, right? Let's say you don't have rabbit in the chart, but you want to find a right teacher to teach you about investment, or the right doctor, or you want to find, if you are doing sales, you want to find the right customer that willing to buy your product or services, the right people basically, and then therefore, or the right connection, therefore the number 1 star is the one you need to look for. So now, number 1 is related to the north, so which means that in 2022, the north sector is the area you should use more if you want to get help, right? You want to find the right people to, or for example, if you're running your own business. I think one of the most challenging tasks right now faced by business owner is about the mass resignation, right? A lot of people don't like to work anymore, right? They just want to stay at home and do something else, right? So it's very hard for you to attract the right talent. Yeah, this is a constant problem happening to all business people, right? Finding the right people is hard. So therefore, if your goal is to build a team, or even if your bank, you're selling investment package, you want to recruit a team for your organization or for your own team, then I would suggest you to use more of this north sector, right? So the north sector would be the one that you're going to do. Yeah, you use more of it. Okay, all right. So now just recap a little bit here. There are three sectors that will be good. So let me recap. First, if you want for cash flow, you're going to use the northeast sector. If you want investment opportunities, you use more of the south sector for this year. And for getting help, finding the right people, attracting the right talents for you, then you look for noble people. Okay, all right. So it's in the north. So clearly, let me summarize. These three areas is a good area. Let's say you don't know. You forget about everything else I said today. Just remember, north, east, south, and north is good. Just use any of these three areas. You will see, I would say, you see opportunities coming to you. Okay, this is the power of Feng Shui. Okay, now, let's say you're a bit lazy. You say, I don't want to do all this, right? So, but at least you also need to know which area to avoid. Don't you think it's important? Because if there is such thing called positive energy in the house, so do bad energy. So when we look at the chart, I also want to share with you two areas that you try not to use a lot in 2022. So whenever I mention using a sector, means that don't try to spend more time there. So one of the sector I want to share with you today is this one. Number 2, which is in the southwest, because this sector represents illness. Okay, so now, don't worry about it first. So if you already, or maybe your family member or someone that already have pre-existing health condition, and then they are not well right now, so better don't let them sleep in the southwest sector, because southwest sector is an area, is an illness sector for 2022. Okay, but if you are someone healthy, you don't have any issues, right? You have a lot of energy, then don't worry. Okay, so am I clear here? So if you're already sick and not well, or you are having some serious health issues, and then try to avoid sleeping in southwest sector for 2022. Because if you sleep there, the energy is negative, so it might slow down your healing, or it may make the condition worse. Don't do it. But if you're healthy, you still can stay here, because the southwest sector also represents property investment opportunities. Okay, you can actually look into the southwest sector. Okay, all right. So now, finally, another one here is about another sector you try to avoid is the number 5. So the number 5 this year is located at the center of the house. So try not to use this area or perform major renovation at the center of the house this year. Because this year, the negative energy resides in the center, so we don't want to further activate this energy. Okay, so remember, there are 2 energy you need to avoid. The first one would be southwest sector, and then the next one would be the center. All right, so this is the how you use Feng Shui, a quick way to use Feng Shui for 2022. By the way, let me remind you again, this technique here is a short-term Feng Shui, so it's only applicable for 2022, starting from February 4th this year until February 4th, 2023. All right, because this energy will shift again every year. Okay, all right, so you know exactly what to do now. Let me recap to you just now. I teach you how do you read your astrology chart, so you know what to expect for 2022 and what kind of action you should take. Right? And you are not, let's say you find that your chart don't have much opportunities. I also share with you how do you use Feng Shui to increase opportunity, especially on investment opportunities. Okay? All right, are you clear? Bazi and Feng Shui. So once you're clear on this, let me share with you one more part, because a lot of people keep asking. Okay, after Chinese New Year, when is the great dates to start work. Yeah, recommence of work. Yeah, do you want to know this as well? Right, because a lot of people, especially if you actually take a holiday and don't know which day to start work. So I actually prepared this information for you as well. Okay, so let me show you on the slide. So there are 4 dates in total. So let me share with you the first one here. The first one would be on the 3rd of February. 3rd of February 2022, and then the time will be from 7 a.m. until 8:59 a.m. All right, so this one will be on Thursday. So, and this one will benefit everyone except if you have a snake animal sign in your chart. It doesn't mean it's bad. It doesn't mean it's bad. It just means that you cannot benefit from this energy only. All right? So that's the first one for you. The second one that you can consider a great dates as well, auspicious dates, is a 4th of February 2022, and the time is from 9 a.m. until 10:59 a.m. And if you have this horse in your Pata chart, then you might not able to benefit from this auspicious energy. Remember, you have 4 animal signs, right? Check your chart. Do you have the horse there or not? Okay, now let's move on. The third one here would be on 7th of February, on Monday. So this would be a week after. So, and then this is slightly early, if you can. Yeah, it's 5 a.m. to 6:59 a.m. And then this is a great time for everyone except you have the rooster in the chart. Okay, and again, right? So let me clarify this. If you have the rooster in the chart, you start in this day, it doesn't mean it's a bad day. It doesn't mean you're going to screw up for the rest of the whole year. It just means that you might not able to benefit from the energy from starting on this day. That's it. All right? So nothing, it doesn't mean that bad luck will come to you. Don't worry. So now, finally would be the, this one is a bit late. It will be on 10th of February. And then the time also very early from 5 a.m. until 6:59 a.m. And then it will not benefit the red animal sign. Okay, all right. So I hope that you actually find this sharing here beneficial and useful to all of you here. And don't let this stop, right? So I would say that in every year, how do we make a year a great year? It's not about like, I want to make like 10 million, 100 million, right? The goal here is to become 10% better. I think that one would be actually it's a great year for you, right? Make progress daily, and this is how we use astrology and Feng Shui to help us to become better. Because the secret to happiness is about progress. You think about this, right? If you're not making progress this year, you're not going to be happy. So therefore, use this. I would say share this as well. Share with your friends, your family. Help them, show them the direction how to become better, and then now you become valuable to them. Okay, all right. So thank you. Yeah, thank you for tuning in, and then actually spend some time with all of us here, to learn something. So I would say that I'm going to see you again. Yeah, so many ways. You can look at our websites or everywhere, Instagram. So many ways you can connect with us. So you have one more information, yeah, that is available. Okay, so now I would say that, yeah, that's all for my sharing today. Yeah, I hope you find it beneficial, and I'm going to see you again anytime soon, right? I wish all of you here a healthy and a prosperous year ahead. I'm Iverson Lee. I will see you again soon.
Thank you, Master Iverson. That was very enlightening and a very deep look into the Feng Shui readings for this year. I don't know about you. I hope you guys were taking notes, especially on the time to start work thing. My only question is, what happens if you're working from home? But you know where to reach out to him to find out more. And we've reached the end of our webinar today. I'd like to take this opportunity to thank all of our speakers today for sharing such insightful analysis. And of course, thank you all, our viewers who were tuning in. This webinar would not have been a success without our viewers. For any inquiries, please reach out to your relationship manager or personal financial advisor, as they're only one call away to assist you. Now, before we go, one final message. We're also running a survey. The QR code for the survey will come on after this. Do sign on and participate in our survey, and a lucky participant could also win a mystery prize. There's also another QR code, which is for the Maybank EasyQ feature, where you can scan the code and make an appointment with any Maybank branch for inquiries or other banking services. This is part of Maybank's initiative to make banking easy for everyone. Now, this has been the 2022 Investing Outlook Stress Points, Risk and Opportunities webinar. Again, thank you all for tuning in. I hope you have a good weekend and a great 2022. I'm Simi Boon from BFM 89.9 signing off. Goodbye.
do 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 do.